Welcome to the channel JIV and CIV Made Simple. If you are looking for a study material of IIBF, if you want to revise the entire IIBF MSME certification course, right, you are at the right place, because in the next 4 hours we are going to revise the entire syllabus, every important points, and I will help you remember the entire concept in a very easy manner. So watch the video till the end. Your concept will be clear and you will be surely able to solve MCQs based on them. And if you want all this content in a structured format, in the PDF format, downloadable format, in the form of hard copy, you can enroll in our MSME course, using which many aspirants have previously cracked the examination. Right, with in following the structured approach, we provide you unit-wise theory, unit-wise MCQs, which caters to almost 2000 plus MCQs. We provide you previous year questions and capsule content. So let's get started. Watch the video till the end and you will feel confident in the examination hall. So let's get started. First point is the evolution of MSME in India. Let's trace the root of MSME in India. Before British rule, India's economy was mostly agrarian, with village being self-reliant. Skilled artisan made goods for daily needs, while urban centers like pilgrimage towns and trade hub produce items for local use and export. Now, Indian craftsmen were globally known for textile, silk, muslin, shawl, as you can see, right? For textile goods, muslin, shawl, and carpets, wooden goods, jewelry, etc. Right? So, I told you, right, ivory work, even artistic glassware. So, these products carried India's name across the world for their unmatched quality. Right, so these things they carry the name of India throughout the world for unmatched quality. So this was the golden era of India's traditional enterprise. Right, this was the golden era of the India's traditional enterprise. As you can see, major products include textile, everyday handicraft, muslin, shawl, carpet. Right, so this was the golden era of the India's traditional enterprise, sustainable, skill driven, and export oriented. Now have a look at impact of British rule on India and MSME. So with the decline of the Mughal Empire, the East India Company took control of the India's trade. The focus shifted from exporting India's finished good to exporting the raw material. So earlier what happened, that finished goods were you exported, but now after the Mughal end of the Mughal Emperor and commencement of the East India Company, what happened, that they started exporting the raw materials, and as industrialization picked up in Europe, cheap machine made import flooded Indian market. So what happened in the Europe, industrialization picked up, and as industrialization picked up, what happened, cheap machine made import flooded the Indian market. Local artisans, local businesses lost customer at home and abroad. Right, as you can see, local artisans and local businesses lost customer at home and abroad. Now then comes urban trade hub. Urban trade hub was hit the hardest. As you can see, urban trade hub was hit the hardest, while village artisan also suffered, though to a lesser extent. Later, under the direct British Crown rule, mass production unit in India further dismantled traditional industry. Unfair competition destroyed indigenous enterprises, blocking their growth and blocking their revival. So this is what we have discussed regarding the decline of the Mughal Emperor and rise of the East India Company, and how industrialization picks up, how urban trade were hit the hardest, how village artisans were also suffered but to the less extent, and what happened during the British Crown rule. So this topic we have just covered. Now friends, let's shift our focus to the next part. So after independence, India adopted a mixed economy with socialist principle to promote local businesses. Khadi emerged as a strong symbol of self-reliance and freedom. So what happened, after Indian independence, India adopted a mixed economy, right? There was a mixed economy with socialist principle to promote local business. Khadi emerged as a social symbol of self-reliance and freedom. The Khadi movement was institutionalized with the All India Khadi Department in the year 1922. Remember, Khadi movement was institutionalized with the All India Khadi Department in the year 1922, the Khadi Board in the 1923, and All India Spinner Association in 1925 to make it more inclusive. Right. So remember the chronological order. 1922, it was All India Khadi Department. 1923, Khadi Board. 1925, All India Spinner Association. What happened in the year 1938? The National Planning Committee formally recognized small scale and cottage industry. Right. National Planning Committee formally recognized small scale and cottage industry. Soon after independence, the 1947 Industrial Conference classified village and small industry into three categories. So after just after the independence, right, the 1947 Industrial Conference classified village and small industry into three categories. The first one was the service category, which was regarding providing the services. Second one was the manufacturing enterprises, which were for producing goods. Third one was the auxiliary enterprise, which was for supporting larger industry. So service enterprise, manufacturing enterprise, auxiliary enterprise. Service was for producing service, manufacturing was for producing goods, and auxiliary was for supporting larger industry. So this laid the foundation for India's MSME sector in the modern era, right? So these were laid the foundation for India's MSME sector in the modern era. Now friends, post-independence, India gave official recognition to cottage industry through the 1947 Industrial Conference, followed by creation of the Cottage Industry Board in 1948. So first of all, what happened? Recognition was given to cottage industry through the 1947 Industrial Conference, and then in the year 1948, Cottage Industry Board was created. Now what happened? The Industrial Policy Resolution of 1948, it laid the foundation for small and cottage industry. And this small and cottage industry was supported by key milestone. Like you can see, in the year 1951, Industrial Development and Regulation Act comes into picture. 1953, All India Khadi and Village Industry Board comes into picture. 1955, Small Scale Industrial Board comes into picture. And 1956, Khadi and Village Industry Commission, in short we call it KVIC, right? So the SSIB, which is formally defined as a small scale industry. So SSIB also give a formal definition of the small scale industry based on capital, workforce and power uses. Later in the year 1977, tiny industry were introduced to boost local entrepreneurship and serve neighborhood market. So from traditional village enterprise to today's MSME, the journey reflects resilience, policy support and continuous evolution. Now friends, let's talk about the transformation of MSME and the key government intervention. Over the year, changing policy and political boundaries opened new opportunities for MSME. Both national and state government introduced a structured policy and support measure to boost the sector, to boost the MSME sector. The SSIV also gave a formal definition of a small scale industry based on capital, based on workforce and based on the power uses. Later, in the year 1977, tiny industry were introduced to boost local entrepreneur and serve neighborhood market. So, from traditional village enterprise to today's MSME, the journey reflects resilience, policy support and continuous evolution. Now let's talk about transformation of MSME and key government intervention. So over the year, changing policies and political boundaries opened new opportunities for MSME. Both national and state government introduced a structured policy and support measure to boost the sector. In the year 1999, the Ministry of Small Scale Industry and Agro and Rural Industry was set up. By the year 2001, it was split into two separate ministries. The one was called Ministry of Small Scale Industry or SSI, and the other was called Ministry of ARI, which is called Ministry of Agro and Rural Industry. A major milestone came with the MSME Act of 2006, which provided a clear regulatory framework. Finally, in May 2007, both ministries were merged into a single Ministry of MSME, streamlining policies and strengthening support for the sector. These reforms shaped the backbone of today's MSME ecosystem in India. Now friends, let's talk more about MSME. So MSME stands for micro, small and medium enterprise. Friends, if you are looking for such kinds of short capsule notes, unit-wise theories, unit-wise MCQs PDF, you can WhatsApp me on the number shown on the screen, that is 8292857381, or in the description section of the video I have provided the number as well as the course link. You can install our app named JIV and CIV Made Simple, and in the app you can find the course, and this course has helped many aspirants to crack the examination in their first attempt. Now friends, so we are talking about MSME. MSME full form, micro, small and medium enterprise. So these include business involved in manufacturing, processing or storage of goods, and these are defined under the MSMED Act of 2006. MSME are the backbone of Indian economy. They are providing millions of jobs, contributing nearly 45% to the manufacturing output, and are around 40% of the exports to the Indian exports. So contributing 45% to the manufacturing output and 40% to the Indian export. Now to support this sector, the Ministry of Small Scale Industry and Agro and Rural Industry, these two ministry was set up in the year 1999. Later in the year 2001, it was divided into two separate ministry under the Government of India business rule. This marked the beginning of a more structured approach to strengthening and promoting MSME in India. Now let's look at the MSME mission and the objectives. On May 9, 2007, India formed the Unified Ministry of MSME by merging earlier ministry. Its mission is to promote the growth of small and medium enterprise with a special support to Khadi, village and core industry. As you can see clearly written, a special support to khadi, village and core industry. So the focus is on creating new businesses, expanding job and implementing policies and scheme effectively. The MSMED Act of 2006 was a turning point. Why? Because it included services along with manufacturing. It replaced the term industry with enterprise and changed tiny to micro. So industry was replaced by enterprise, tiny was replaced by micro. Since July 1st, 2020, MSME are classified using a composite criteria of both investment and turnover as per the RBI guideline. These ensure a modern, transparent and inclusive framework for Indian MSME sector. Now, if you see the classification criteria, so friends, MSME in India are classified into three categories: micro enterprise, small enterprise, medium enterprise. Micro means investment in plant and machinery up to 1 crore and annual turnover up to 5 crore, 5 times, right? Small means investment in plant and machinery up to 10 crore and annual turnover up to 50 crore. Medium means investment in plant and machinery or equipment up to 50 crore and annual turnover up to 250 crore. So you can see 15, 1050 and 5250, right? So this way friends, I hope this classification criteria is clear. So 1, 5, 50 and just multiply by 5 for 1, 5, 50 for investment in plant and machinery and multiply this by 5 to get on the basis of annual turnover, right? Now what is there. Entrepreneur can register online through the Udyam registration portal through using self declaration. No document is required, right? So they can register online through the Udyam registration portal based on self declaration. Now on successful registration, they get a permanent Udyam registration number and a digital certificate that is called URN, right? So once they registered successfully, the entrepreneur get a URN. What is URN? Udyam registration number, and also they get a digital certificate, as you can see. And then if an enterprise grow beyond its limit, and one more thing is that a formal Udyam registration certificate or URC is issued electronically, right? This is another point. Now if suppose enterprise grow beyond its limit, so it is automatically upgraded to the next category. Downgrading happen only when both investment and turnover fall below the set threshold, right? So this is the point. Now let's talk some more point about the MSME classification. So for MSME classification, enterprise with the same PAN number but multiple GSTIN, they are treated as one unit and their combined turnover and investment are considered, right? So suppose two enterprises are there, they are having the same PAN number but their GSTIN are multiple, right? So they are treated as a one unit and their combined turnover and investment are considered. One more point is that investment is linked to the previous year income tax return or ITR. So for new business, it is declared on a self declaration basis until the first ITR filing. So friends, investment is linked to the previous year income tax return. For new business, it is declared on a self declaration basis until the first ITR filing. Plant and machinery include all tangible asset except land, building, furniture and fitting. And the value is based on purchase invoice excluding GST. Now one more point is export turnover. Export turnover is excluded from the total turnover. Data is verified through income tax and GST record. Initially self declaration was allowed, but PAN and GSTIN are now mandatory. Now one more point is that if an enterprise grow into higher category, it keep its old status for 1 year. If it move down, the change is effective is verified through income tax and GST record. Initially self-declaration was allowed, but PAN and GSTIN are now mandatory. Suppose an enterprise grow into higher category. So what it does, it keeps its old status for 1 year. If it move down, changes it effective only from the next financial year. Remember these important points. Now let's talk about the advantages and challenges of the MSME in India. So the first thing is impact on the economy, right? So that MSME are the backbone of Indian economy, driving innovation, creating jobs, boosting manufacturing and GDP growth. So MSME provide local employment, it give youth stable opportunities close to home, right? But the sector faces challenges, limited access to finance, weak infrastructure, outdated technology. So what kind of challenges are faced by the MSME sector? As you can see, limited access to finance, weak infrastructure, outdated technology, regulatory hurdles, shortage of skilled manpower. So these issues restrict the efficiency and the growth. So overcoming these barriers is vital for unlocking the full potential of of MSME and ensuring that they continue to fuel Indian economic progress. So MSME classification based on investment and turnover plays a key role by helping enterprises access better resources and opportunity. Now, impact of MSME on the Indian economy. Let's have a look. So MSME are the true growth engine of the Indian economy. With low startup cost, they make entrepreneurship affordable and generate massive employment, especially in the rural and the semi-urban area. Right. So MSME boost innovation. They encourage, as you can see, they encourage basically new venture. They encourage and they drive balanced regional growth across tier 2, tier 3 cities and villages. Right. So they drive balanced regional growth among tier 1, tier 2, tier 3 cities and villages. Then MSME also strengthen the Indian export. As you can see, export enhancement. So how do they strengthen the Indian export? So basically they participate in export activity, and then they diversify the economy across manufacturing, services and agriculture, right? So that is called economic diversification. And also they act like an innovation driver. So their MSME adaptability enable quick response to market shift, right? So by creating both self-employment and wage job, they reduce income inequality while reinforcing the India's industrial ecosystem. Now friends, let's talk some more important points. What are the things which are done by MSME? So encouraging the inclusive growth. What is the meaning of inclusive growth? I think this one is repeated. So friends, that inclusive growth has always been a core mission of the MSME ministry, focusing on poverty reduction, supporting marginalized community and driving sustainable development, right? So that has always been core mission of the MSME industry. MSME usually operate with limited resource and simple management structure. So they operate with limited resource and simple management structure. So friends, inclusive growth has always been the core mission of the MSME ministry, focusing on poverty reduction, supporting marginalized community and driving the sustainable development. So MSME usually operate with limited resource, simple management structure. Most are directly run by their owner, enabling quick decision and close control, unlike large corporation that need complex department. MSME also form the backbone of Make in India initiative, strengthening domestic manufacturing. Right. So with improved access to credit from financial institutions, MSME are playing a crucial role in powering India's self-reliant growth journey. Now let's look at MSME. So that is a contribution to the Indian economy. So friends, that MSME are the lifeline of Indian economy, promoting entrepreneurship and regional growth across tier 2, tier 3 city and rural area. So what they do, they strengthen the export, they diversify industries and fuel innovation while creating millions of jobs that drive economic equality and inclusive growth. With lean management, you see this word written here, lean management, right? So with lean management, MSME act like a vital supplier to a large industry, and it plays a central role in the Make in India mission. So innovative leadership, income inequality, support to larger growth, right? Now with lean management. And today, if we look at the data, along over 63 million MSME contribute about 30% to the India's GDP and are targeting $40 billion in export by 2023 and $1 trillion by 2027. Now women who won over 20% and disadvantaged group own nearly two-thirds of the MSME, highlighting their inclusive nature. Predominantly rural, these enterprise power local job creation while ensuring strong supply chain for big corporation, making MSME the true growth engine of India. Now friends, let's look at the benefit of MSME. So that MSME enjoy multiple benefits that fuel their growth. The government provide collateral free loan, the government provide credit guarantee through the credit guarantee trust fund. So all these things make financing more accessible. MSME are highly flexible, highly adapting quickly to the market change, and are major job creator, contributing nearly 30% to the India's GDP. Right. So now to support them further, right, the government offers some special initiative like exclusive preference in the tender bids, electricity bill concession, up to 50% subsidy on patent registration, and reimbursement of 75% of the ISO certification cost. So remember this percentage: 50% of intellectual property subsidy, 75% of ISO certification reimbursement. So these measures encourages innovation, reduce cost, and they strengthen the MSME as the key driver of the India's economic progress. Now, what are the challenges faced by Indian MSME? Already I told you that there is a shortage of the skilled labor. Also, difficulty in securing fund due to collateral shortage. Then intense competition is there from large firm, e-commerce player. Technological gap is there. So because they are depending on traditional methods and poor infrastructure. So the MSME are operating in region with inadequate road, power and connectivity. Regulatory burdens are there. Economic vulnerabilities are there because these our MSME are susceptible to downturn and natural calamity. And finally, marketing hurdle. So challenging in expanding reach due to varying local regulation and restriction. Now let's look at the opportunities in MSME. So if we talk about the opportunities in MSME, so MSME in India has endless opportunity. They are expanding globally. They are taking Indian product to international market. Financial support is easily available through loans and subsidies, helping business grow faster. Right? So global promotion, financial support, government initiative. Government is also promoting MSME through policies and schemes. At home, rising domestic demand, right, it creates new chances for entrepreneur with low investment requirement. Anyone with a good idea can start their own venture. MSME also focus on skill development, training the workforce, using market insight and networking to form a strong partnership. Altogether, this make MSME a powerful driver of the India's future growth. Now future prospect, so that is can India MSME as the growth engine of the new India. Obviously, robust government backing is there, self-reliance vision is there, vast entrepreneurial network, major GDP contributor. Now look at the key highlight of the India's MSME sector. India's MSME sector is the backbone of our economy, supported by initiative like Make in India, Digital India, Vocal for Local. So this sector drive growth and self-reliance under the Atmanirbhar Bharat mission. With more than 7.9 million MSME, it provides job to over 120 million people and contribute nearly one-third of the India's GDP. It also preserves tradition through cottage, khadi, village, core industry while expanding the India's global reach. Now MSME benefit from easy loan, subsidies, skill development program. Yes, they are for them. They meet rising domestic demand, right? So they meet rising the domestic demand and encouraging entrepreneurship with low startup cost and stay competitive through market insight and collaboration. Every year on August 30, National Small Industry Day celebrate the progress and the potential, highlighting MSME as a true engine of the Indian economic future. Now, importance and challenges. So I think this thing we are discussing again and again. MSME are the backbone, right? With 63 million people with 63 million enterprises, they employ more than 110 million people. They contribute about 30% of the GDP, which is nearly half of the Indian export. In fact, 95% of all the industrial unit in the country belong to the MSME sector. But the journey has not been easy. MSME have faced tough challenges from demonetization, GST rollout, and the pandemic. Rising input cost up to 30% to 50% have worsened their financial strain. Yet MSME remains the real growth engine, right? So what are the challenges we have just talked now? They remain the real growth driver, industrializing underdeveloped area and creating jobs. To unlock their full potential, MSME needs easier access to credit, smoother regulation, a strong export support. So with the right push, they will continue powering Indian growth history. Now friends, access to capital is one of the biggest challenge for MSME. Many face liquidity issue and survive on informal unsecured loan. Nearly 90% rely on these sources instead of the formal bank finance. So friends, as we know that access to capital is one of the biggest challenge for MSME. Many face liquidity risk and survive on the informal and secured source. Nearly 90% of them rely on these kind of sources instead of the formal bank finance. So to truly solve this, we need targeted solution like cluster financing, where banks support group of MSME with shared infrastructure. In fact, the Ganguly committee in 2004 has already recommended bank to back the recognized cluster. So this cluster financing was backed by the Ganguly committee in the year 2004. Other strategies include consortium financing, where multiple bank and industry bodies come together to support MSME, and learning from successful international model like Italy, which uses a small equity fund and credit guarantee to ensure low NPA while improving SME access to finance. Right. So one technique I told you, consortium financing, and another technique I told you, learning from successful international model. So like take for example Italy. So Italy uses a small equity fund. Italy uses credit guarantee to ensure low NPA while improving the SME access to finance. However, a major hurdle remain. What is the major hurdle? The lack of collateral, right? The lack of collateral and proper financial record. Since many MSME don't have an audited account or tax filing, bank hesitate to lend, right? Many MSME, they don't have audited account, they don't have tax filing, so bank hesitate to lend. This forces entrepreneur to depend on money lender, putting their sustainability at risk, right? So this is the point. So what I'm telling you, that a major hurdle is the lack of collateral and proper financial record. Since many MSME don't have audited account, many MSME don't have tax filing, bank hesitate to lend, right? This forces entrepreneur to depend on money lender. Now let's look at the MSME support and export enhancement. You know that MSME often face long and complex loan procedure that discourage them from seeking finance. Lack of guidance in local language and systemic biases, including gender discrimination, make access even harder, especially for business in tier 2, tier 3 city and rural area. Now look at the export growth opportunity. So friends, if we talk about the export growth opportunity, MSME already contribute over 40% to Indian export with a goal of reaching 60%. But they face a stiff competition from countries like Vietnam, Bangladesh and China. Limited global exposure make it tough for many MSME to showcase their product. Tax incentive like those offered in Singapore, along with government backed research and development, e-commerce export strategy and proactive marketing, these things can help India's MSME shine globally. Now what are the challenges and policy recommendation? Many MSME stay deliberately small to avoid heavy compliance and documentation. So complicated GST process, numerous HSN code and fluctuating rate, this create confusion, right? So advanced GST payment without timely refund block cash flow and strain working capital. So these are the constraints that they face, right? And now simplifying procedure and speeding up refund, these are crucial to support MSME growth. Now what are the recommendations for MSME improvement? So as you can see that simplify GST compliance, leverage technology, ease the online process. So these things can really help to MSME sector. And how to strengthen MSME support? Consortium financing, already I told you. Proven method you have to adopt, and resolve collateral and documentation issue. You should develop solution for entrepreneur lacking traditional financing documentation. How to overcome the banking challenge? So loan criteria, bank heavily rely on industry balance sheet, which many micro enterprise don't have. Many micro enterprise cannot provide you balance sheet. So you have to do some modification in your loan criteria. Bank hesitation, insufficient financial record lead bank to discourage loan to a small scale enterprise. Loan application barrier, lengthy, complicated process, lack of vernacular language, they deter MSME, particularly non-urban area. Now, have a look at the power supply and technology upgradation for MSME. Did you know electricity make up nearly 16% of the MSME expense? 16%, right? That is huge. A reliable and stable power supply is critical because even a small disruption can stop machine, leave worker idle, and increase the cost. A state electricity board must ensure uninterrupted power, just like in developed country, so that MSME can save on capital, operation, and maintenance. But power is not enough. Technological upgradation is equally vital. Modern machines and processes help MSME stay competitive, yet many face funding gaps that stop them from investing in new technology. Since MSME are the backbone of Indian economy, the government must step in to remove this barrier and to ensure the sustained growth. Now friends, let's talk about the MSME incorporation. Did you know that more than 90% of the MSME in India still work as a simple proprietorship or partnership? But incorporation give them better governance and a stronger growth opportunity. MSME can be set up in many legal form like sole proprietorship, one person company, partnership, LLP, private company, or even public limited company. They can be formed in many form. Take sole proprietorship for example, right? It is the easiest and cheapest way to start. A single person own and run the business with no heavy legal formalities. But there is a catch. The business and the owner are treated as the same. That means unlimited liability. Yes, in the case of sole proprietorship, the business and owner are treated as the same. So it clearly means unlimited liability, which means if the business fail, personal asset can also be at risk. And when it comes to tax, income is filed under the owner personal return. So these are the key points related to the sole proprietorship. Please remember it, that single individual own, right? Unlimited liability is there. They are treated as the same, right? And liable taxation. I told you that income tax is filed under the owner personal return. Then what are the advantage of sole proprietorship? As you can see, that that it is super easy to set up with minimum paperwork and very low cost. The owner enjoy complete control, makes all decision, keep all profit. Taxes are quite simple, no corporate tax. Income is taxed only once. Plus, business expense can be claimed as deduction. And if needed, closing the business is also quick and hassle-free. These are the advantages. Let me remind you once more that super easy to set up, owner enjoy complete control, makes all decision, taxes are simple, no corporate tax, income is taxed only once, business expenses can be claimed as deduction. Flip side I am talking about, owner carry unlimited personal liability. It means personal assets are at risk if the business suffer losses. And raising capital is tough since investor usually avoid sole proprietorship. Taxes can also feel heavier due to self-employment charges. And transferring business ownership or name require legal formality. So to conclude, sole proprietorship is perfect for small businesses. So to conclude, you can think like this, sole proprietorship is perfect for small businesses and new entrepreneur, offering freedom and control. But with freedom comes responsibility, so managing risk smartly is the key. Now let's talk about the OPC, that is called one person company. So OPC is basically a private limited company with a single member. It cannot invite the public to buy its share. So what are the key features of OPC? It can be formed with share or guarantee, first point. Second thing is that for a share based OPC, minimum capital required is just 1 lakh rupees, right? And share cannot be transferred and public offering are not allowed. The company must always display the word one person company beneath his name, right? So remember the keywords: formed with share and guarantee. For a share based OPC, minimum capital required is 1 lakh. Share cannot be transferred, public offering are not allowed. Company must always display the word one person company beneath his name. As per Companies Act 2013, a special rule applied to contract made by OPC. Now what are the advantage of OPC? It has separate legal entity, so the owner liability is limited. It is easier to raise fund from venture capital, angel investor or bank compared to proprietorship. Compliance is lighter. We basically no need for cash flow statement or company secretary. The director alone can sign the returns. Now in short, we can say that OPC give you the best of both the world. Limited liability like a company, but flexibility like a proprietorship, right? So it give you best of both the world. Now let's look at some more point about the OPC. So as you can see written here clearly that OPC is a private limited company with just one member, but unlike other company, it cannot raise money from public. So key points I have already told you. Advantages are that it is like a separate legal entity. which will limit the member liability to their shareholding. Then we have the easy fundraising, which means it can attract venture capital, angel investor, and secure loan more easily than proprietorship. Then we have simplified compliance, single incorporation, efficient management, and perpetual succession. So these are the advantages of it. What are the disadvantages? Yes, there are limited growth potential. Business restriction are there. So disadvantage, limited growth potential means they are restricted to one member only, cannot add shareholder to raise additional capital. Then business restriction, which means cannot engage in non-banking financial activity or operate as a charitable company. Concentration of control, which means overlapping ownership and management may lead to governance risk due to lack of separation. So friends, what we are talking about, OPC can be registered as a company limited by share or guarantee. It minimum authorized capital start as rupees 1 lakh, but no minimum paid up capital is needed. Right now, share cannot be transferred and public offer are not allowed. And the word one person company must be displayed below its name. Even contract made by OPC get a special recognition under the Companies Act 2013. So what are the advantages? It is a separate legal entity, so the member personal asset remains safe. Liability is limited only to their shareholding. It is easier to raise fund compared to sole proprietorship, since loan, venture capital, angel investor, they are possible. Now compliance is simpler, which means no cash flow statement is required, no company secretary signature is required. Easy incorporation, which means only one member and one nominee are required, and the member can also be the director. Then we have the quick and efficient decision making, as there is a no conflict among multiple members, so quick and efficient decision making is necessary. Then it enjoy perpetual succession, means the nominee automatically takes over if the sole member passes away. What are the disadvantage? So growth is limited, it can have only one member, so bringing in more shareholder is not possible. Then certain business restrictions are there, like OPC cannot turn NBFC activity or charitable company, and too much concentration of control, ownership and management's overlap, which may cause governance risk. So EPC is the best suited for solo entrepreneur who want the benefit of a company but with simplified rule, but with flexibility. If you compare OPC and sole proprietorship, so when it comes to a small business, people often confuse between OPC and sole proprietorship. And OPC is a separate legal entity while a sole proprietorship is not. And in OPC, the owner enjoy limited liability, while in sole proprietorship, liability is unlimited. OPC has perpetual succession. It means the company continue even if the owner is not around, while sole proprietorship, end with the owner. Now, loan in OPC are the company's responsibility, while in sole proprietorship, the owner also bear the burden. Then registration. OPC registration is mandatory, but the sole proprietorship does not require formal registration. And finally, in OPC, credit record belong to the company, while in sole proprietorship, they belong to the individual. So in short, OPC provide more structure and more protection, while sole proprietorship is simpler but riskier. Now let's look at the partnership firm. So partnership firm are defined under the Indian Partnership Act 1932. This was an agreement between two or more party person sharing profit. So what are the essential element? It require a formal partnership agreement. Partnership cannot arise from family relation or operation by law. Right, what are the characteristics? Minimum 2 partner, maximum 10 partner in banking, 20 in other sector, and partnership deed is there which formalize rules and terms. Right, and signing by all parties necessary. Registration is voluntary but recommend to enjoy legal advantage. What are the core features? So if you talk about the core features, you can see first core feature is the partner competence. Partner must be competent. Profit and loss are shared as per agreement. Unlimited liability is there. Partner bear joint and several liability for debt. The firm lack a separate legal entity from its partner. Right, this is called legal status. What about the stake transfer? So that interest transfer require consent of all the partner. Advantage is that multiple partner contribute diverse insight, easy and cost effective, and more partner bring greater financial resource. Tax benefit is there, interest protection is there, legal regulation that you face fewer regulatory constraint than corporation. Then shared risk, which means risk and responsibility are distributed among partner. If you look at the disadvantage, then we have the unlimited liability because partner are personally liable for all business debt, joint and severe liability, instability. So firm may dissolve upon a partner death. So some disadvantage, advantage, we have already covered it. Now let's look at the LLP. What is LLP? Limited liability partnership. So let's discuss about LLP. Basically, it is a kind of hybrid structure. So what is the meaning of hybrid structure? Basically, that limited liability partnership is a modern business structure that blends the flexibility of a partnership with the advantage of a company. It is ideal for a small and medium business and service provider. The LLP has perpetual succession, which means it continue to even if the partner changes due to retirement or death. Importantly, it is an independent legal entity, meaning it can own properly, right? Enter into contract, sue or be sued in its own name. Now some more points regarding LLP I am providing you. That LLP continue even if the partner change, that is called perpetual succession. Contractual capacity, separate legal entity, which means basically it can own property, sign contract, sue or be sued in North's name. Then limited liability, which means partner are safe. So then we have the audit requirement. So that audit requirement is mandatory if contribution crosses 25 lakh or turnover exceeds 40 lakh. Annual compliance. So which means every LLP must file account and solvency statement with the registrar. Government oversight. Central government can appoint inspector to investigate an LLP. Conversion flexibility. Firm, private company, unlisted public company, they can convert into LLP. And agreement based. So right and duties are governed by the LLP agreement Act and if required by LLP Act 2008. Now if we talk about the incorporation, so let's discuss the incorporation few points. Yes, so you can see that DPIN is required. That means all designated partner must obtain a DPIN from Ministry of Corporate Affairs. LLP name must not duplicate existing LLP. And name reservation. That means reservation through e-form 1 is required before incorporating. And incorporating filing, fill the e-form to post name. Quickly understand the evolution of the Indian MSME policy framework between 1948 to 1991. The policy framework acted as a guiding tool for negotiation, for decision making and drafting detailed policy within the organization. Recognizing the importance of micro and small enterprise in generating employment and ensuring fair income distribution, the government set up a small industrial development organization, or we call it SEDO, in the year 1954. Later it was named as MSME Development Organization. So earlier it was called SEDO, a small industrial development organization, and later it was called MSME Development Organization. In the following year, key institutions like, right, what were the key institutions? Like National Small Industrial Corporation, Khadi and Village Industrial Commission, Code Board were also established in the following year. Several initiatives were also introduced to strengthen the MSME, like product reservation for a small unit, easier access to credit under priority sector lending, exemption from excise duty, preferential treatment in government purchases with a 15% price preference, investment in infrastructure and training institute for skill development and entrepreneurship. In short, this period laid the foundation for a strong MSME ecosystem in India. Now friends, let's look at the institutional initiative and the policy evolution from 1991 to 1999. So friends, the government set up MSME Development Institute to train youth in skill and entrepreneurship. And the government also established tool room with international support to provide technical training. Direct industrial centers were also created at the state level to promote the local industrial growth. In 1991, a new policy for small, tiny and village enterprise was introduced to make them more competitive in a liberalized economy. The focus shifted to infrastructure and technological upgradation, quality assurance through testing center, and technical support via new tool room and subcontracting exchanges. Now financial assistance improved with the launch of SIDBI and a special technology fund. To protect small units, the Delayed Payment Act was introduced. Right. So to protect the small units, the Delayed Payment Act was introduced, ensuring timely payment. And finally, there is a scheme that is called IID scheme, which is called Industrial Infrastructure Development Scheme. So finally, the IID scheme was launched to develop mini industrial estate dedicated to a small industry. So what is this IID scheme? Industrial Infrastructure Development Scheme. So friends, now let's talk about the evolution of the policy framework. So from 1999 onward, India's MSME policy entered a new phase of focused growth. In 1999, the government created the Ministry of MSME to give dedicated attention to the sector. What were the key reforms which were followed? Like credit linked capital subsidy scheme, right? So this was initiated to promote technological upgradation. Credit guarantee scheme. This was initiated for collateral free loan, encouraging first generation entrepreneur. Then high excise duty exemption limit of 1 crore to reduce the tax burden. So limit raised to 1 crore for high excise duty exemption, right? Why? To reduce the tax burden. Then market development assistant scheme. So why it was initiated? To help MSME expand their market reach. Meanwhile, the gradual reduction of reserve product encouraged competition and liberalization. The real milestone came up with the MSME Act of 2006, which provided a unified legal framework to address sectoral change. Finally, the third policy package of 2007, it emphasized adapting MSME to changing market and boosting the global competitiveness. This era firmly positioned MSME as the key driver of the Indian economy. Now friends, let's look at the MSME Development Act 2006, MSMED Act. It was a true game changer for the sector. Friends, if you are looking for short notes, unit-wise MCQs, there are almost 1000 plus MCQs unit-wise, previous year questions for the MSME IIBF certification examination. You can WhatsApp me on this particular number shown on the screen. We have a course available specifically for that, using which many aspirants have cracked the examination in the past years. You can also join the league, right? For more detail, you can WhatsApp me or you can check the description section of the video. So now let's come back to our MSMED Act 2006. It was the first law to formally define the enterprise, right? It was the first law to define the enterprise, covering both manufacturing and services, and even introduced the category of medium enterprise, bringing micro, small and medium unit under one framework, right? So the act focus on competitiveness. As you can see, what is act focus on? The act focus on competitiveness and growth, creating a national consultative forum, right? It create a national consultative forum, dedicated fund, right? As you can see, it create a dedicated fund and empowering the government to launch targeted scheme. It also ensured credit support, preferential treatment in the government procurement, strong remedies against the delayed payment, and even a simplified business exit process. Alongside, the FDI policy evolved. The earlier 24% equity cap on MSE was also removed, and classification was based on investment in plant, machinery, or equipment. Today, FDI is allowed in MSME subject to sector specific cap and regulation. In short, we can say the 2006 Act provided MSME with recognition, protection, and the tool to compete globally. Now friends, let's look at the de-reservation policy. And the credit framework for MSME. So MSE. Now the 11th 5-year plan highlighted the drawback of reserving product only for small units. Gradually, the reserve list was cut down from 654 items to just 21, encouraging new investment, modernization and global competitiveness. So earlier there were 654 items in the reserve product. Now after this 11th 5-year plan, it just reduced to 21, right? So this also allowed MSE to scale up and aligned India with the international standard, that is called global alignment. On the credit side, MSE lending was brought under priority sector lending. Domestic bank must allocate 40% of their net bank credit, while the foreign bank earmark 32% with at least 10% exclusively for MSE. Any shortfall by the foreign bank goes into a small enterprise development fund, which we call SEDF, managed by SIDBI. This acts like an apex body for our MSME financing and promoting. I told you na, SIDBI is just like an apex body for what? MSME financing and promotion. Now, other supportive measures included government procurement preference for MSE, a stronger safeguard against delayed payment, and a simplified exit scheme for closing business unit. So these were the other supportive measures. What are the other supportive measures? Government procurement preference, a stronger safeguard, and simplified exit scheme. Together, These reforms created a more open, competitive, and supportive economy for MSE in India. Now let's look at the FDI policy. Friends, let's cover FDI policy, de-reservation and credit policy for MSE. First of all, the FDI policy, the earlier 24% equity cap was removed and MSE was reclassified based on investment in plant, machinery and equipment or services. Today, foreign investment is allowed subject to sector specific limit and the regulation. De-reservation policy, as we have already talked, I told you, the 11th 5-year plan pushed for gradual de-reservation, cutting the reserve product list from 654 items to just 21. This encouraged modernization, it allowed MSE to expand, it opened space for large firms, and it aligned Indian manufacturing with a global standard. Now friends, on the credit side, I told you that lending to MSE was recognized as the priority sector lending. I think we have discussed it. And SIDBI played a central role, offering refinance support to the bank, directing finance to the enterprise. As you can see, refinance support it provide, direct finance to the enterprise, and development initiative it take development initiative like training, capacity building, and promotional support. Together, these policies strengthen MSME with capital access, global integration, and institutional backing. Now, friends, let's look at the MSME technological upgradation scheme. So, friends, first the ISO 9000 and 14001 reimbursement scheme. So, it boosts competitiveness by reimbursing 75% of the certification cost. You can see it reimburses 75% of the certification cost, right? Up to rupees 75,000 for quality and environment management certification. So remember, ISO 9000 is for QMS, quality management certification, and ISO 14000 is for environmental management. So it boosts competitiveness by reimbursing 75% of the certification fee or certification cost. Second, the cluster development program. What is this cluster development program? In short, we call it MSE CDP, Micro and Small Enterprise Cluster Development Program. It is a holistic approach that supports skill training, technology upgradation, marketing, credit access, and common facility center. Third, the credit linked capital subsidy scheme. This question was asked in the previous year. In short, we call it CLCSS. It offered a 15% upfront subsidy on institutional credit up to 1 crore, encouraging modernization of the manufacturing unit. Right, so you can see CLCSS, it offered 15% upfront subsidy on what? Institutional credit up to how much? 1 crore. What it does, it encourages modernization of the manufacturing unit alongside the National Manufacturing Competitiveness Program. In short, we call it NMCP. It offered 15% upfront subsidy on institutional credit up to 1 crore. So this NMCP was set up to make MSME globally competitive, right? And it was designed by NMCC. What is NMCC? National Manufacturing Competitiveness Council, right? So what are the key components of this NMCP? First of all, IPR support through awareness, training, and patent registration. You know what is IPR? So it is very simple, right? So that is called intellectual property right support through awareness, training, and patent registration help. Then setting up of IPFC, which is called IP Facilitation Center, and collaboration with a global agency. Second, we have is the entrepreneurial and the managerial development. So via incubators, up to 16.25 lakh support per idea. I think it is 6.25 lakh. Yes, up to 6.25 lakh rupees support per idea. That is called entrepreneur and managerial development. And third is quality initiative. That is called quality management standard. And some quality technology tool. So like QMS, QTT module, awareness drive, globally study mission to help MSME. Now friends, let's focus on the key MSME technology and competitiveness initiative. First, the mini tool room scheme. It was planned under the 11th 5-year plan to set up 15 tool room through PPP model, right? Public-private partnership model. Ensuring affordable and modern facility for entrepreneur, right? So modern and affordable facility for entrepreneur. So this was the first thing. Then second thing is the marketing support through barcode assistance. So under this, what happened? Reimbursing 75% of the certification fee for 3 years. It helps a small manufacturer access both domestic and the global market. So under the marketing support barcode assistant scheme, reimbursing 75% of certification fee for 3 years. Then the third one was called Lean Manufacturing Competitiveness Program. So it is designed to cut the cost, improve the processes, and boost product quality using global technique like TPM, 5S, JIT, Kanban, right, Pokayok. So a pilot project was implemented across 100 mini cluster with the government support. Now, then we have the finally ICT promotion in MSME. ICT promotion in MSME with an outlay of 160 crore. This initiative built e-readiness infrastructure, cluster web portal, e-catalog, and e-commerce platform along with IT training and local solution for capacity building. Right. Together, these initiatives strengthen productivity, quality, and digital competitiveness of the MSME. Now, friends, let's look at the design clinic scheme for MSME. So friends, let's cover 3 important MSME scheme. The first one is the design clinic scheme. It connects MSME with design expert to co-create solution, improve innovation, and add value to the products. Right. With government support of 50 crore, it set up a central secretariat and regional center for design-led competitiveness. That is called, design clinic scheme for MSME. Second, we have the marketing assistant and technology upgradation scheme. It focused on MSME cluster with a strong export potential. Right. MSME cluster with a strong export potential. It helped with better packaging, modern marketing practices, and competition analysis backed by 19 crore of the government support. Third, we have the technology and quality upgradation support scheme. It is aimed at promoting energy efficient and eco-friendly technology. Key outcomes include lower cost, higher quality, global competitiveness. Right. So what are the activities covered under it? Like capacity building, adoption of energy efficient machinery, carbon credit center, and certification support. Together, these 3 schemes push MSME toward innovation, sustainability, and global market readiness. So 3 schemes we have talked now. Digital clinic scheme, which connect MSME with design expert. Second one is the marketing assistant and technology upgradation scheme. And third one is the technology and quality upgradation scheme. Now, let's talk about the skill development initiative. Right. So skill development initiative, let's look at the skill development initiative of the MSME ministry. The objective is clear: to promote self-employment, upgrade entrepreneurial skill, and to make a small enterprise more competitive. Right. So how implementation happen? So implementation happen through 58 MSME Development Institute and their branches, offering program like entrepreneurship development, skill development, management development, and the business skill. You can see these are the 4 programs which are offered by the 58 MSME Development Institute, which is called MDI. Now, if we talk about the key features include short industry-focused courses with flexible curriculum. Importantly, 20% of the program are reserved for SC, ST, women, and differentially abled candidate with free training and ₹500 month stipend. Training is also delivered through testing center, tool room, technology development center with both long and short-term modules. With an annual capacity of nearly 3 lakh trainee, this is one of the India's largest skilling initiative, helping many participants turn into entrepreneurs, especially in the backward and underdeveloped region. Now, on the marketing side, the government store purchase program provide big advantage to the registered MSME, including fee tender document, exemptions from EMD, that is called earnest money deposit, waiver of security deposit, and 15% price preference in bid against the large industry. These measures strengthen MSME by building skill, supporting growth, and expanding the market access. Now friends, we have something called preferential procurement policy. You know what it means. Let's understand this preferential procurement, export promotion, and infrastructure development for MSME. Under the preferential procurement policy, 58 items are reserved for exclusive purchase from MSE. Section 12 of the MSMED Act make this mandatory, with every ministry, department, and PSU reporting compliance to the Parliament. The goal is simple: to give MSE a strong marketing support. Right. On the export promotion, the government give high priority to the MSE export. Support include reimbursement for displaying product at international exhibitions, packaging training with the Indian Institute of Packaging, an assistant under the Market Development Assistant Scheme, which we call MDA. Right, so this cover participation in overseas fair, foreign study tour, trade delegation, sector specific market study, and even anti-dumping cases. Now, in addition, MSME MSc gets 75% reimbursement of the barcode registration fee for 3 years. So this is how the government does the export promotion. And for infrastructure development, the integrated infrastructure development scheme of 1994, which we call IID scheme, it covered both the rural and the urban area, reserving 50% of the plot for rural region and half of those for micro enterprise. So 50% plot were reserved for the rural region and half of those were reserved for the micro enterprise. Each center has a cost of about 5 crore, with government grant covering 40% in general estate and up to 80% in special estate like the Northeast, Himachal, Uttarakhand, Jammu and Kashmir. The balance came from CDB, bank and state fund. Later, this scheme was merged into the MSc Cluster Development Program, retaining its provision as the new cluster, that is called MSc CDP. So we are talking about the Infrastructure Development Fund. Infrastructure Development Scheme of the year 1994. It covered both rural and urban area. It reserved 50% of the plot for rural region and half of those for micro enterprise. And each center had the cost of about 5 crore, with government grant covering 40% in the general estate and 80% in special estate. The balance came from CDB, bank and state fund. Later, this scheme was merged into the MSc Cluster Development Program or MSc CDP, retaining its provision as new cluster. So these three initiatives, they boosted market access, global reach and infrastructure strength. Now friends, let's talk about the fiscal concession in the form of general excise exemption scheme. So a small enterprise with turnover up to $375,000 per year, they got full excise exemption, right? So basically, a small enterprise with a turnover up to $375,000 per year, they got full excise exemption, while those up to $1 million also enjoyed benefits, right? Now basically it encourages horizontal expansion. What is the meaning of horizontal expansion? Which means this encourages business to expand by selling up more units instead of just increasing capacity, right? So there two things are there: horizontal expansion and vertical scaling. Horizontal expansion means setting up more unit, and vertical scaling means increasing capacity. So instead of increasing, encourage the manufacturing company to or businesses to expand by setting up more units. Later, there was even a proposal to extend this excise benefit to medium enterprise on a tapering basis, so that they could smoothly transition as they grew. So there was even a proposal to extend this excise benefit to medium enterprise on a tapering basis. Now friends, let's look at the some more key initiatives. So the anti-dumping cases. So its support extended to MSE Association for initiating or contesting such case. Barcode, already I am talking about it let more and more time. That's 75% reimbursement of one-time registration and annual fee through GS1 India. Infrastructure Development IID scheme, already we have talked about. It covers rural plus urban area with 50% reserved for rural area and 50% plot for micro enterprise. We have already discussed. It includes modernization of the existing estate. Cost per center is 5 crore and government grant for general estate is 40%, and for Northeast, Jammu and Kashmir, Himachal Pradesh, Uttarakhand, it is up to 80%. Now balance from CDB, bank, financial institution, estate fund, and now it was later subsumed under the MSc CDP, that is MSc Cluster Development Program. Now then we talk about the consultancy and training services for SME, capacity building, institutional support, enterprise development, business development services, turnkey project, skill upgradation. This comes under it. Now friends, let's talk about the regulatory framework for MSME. So let's quickly understand the regulatory framework. It simply means the system of rules made at both the national and the international level to guide the MSME. So there are two types: mandatory regulation and voluntary regulation. Mandatory regulation like laws and the contractual obligation, and voluntary regulation like the code of conduct and self-regulation. The purpose is to ensure MSME work smoothly, MSME stay competitive, MSME follow responsible practices. That is the purpose. Smooth operation, competitiveness, responsible practices among MSME. Now the government plays two roles. The first role is regulatory, second role is a protective. So if we talk about the regulatory role, how government plays the regulatory role? By imposing norms and restriction. How it plays the protective role? What is the purpose of this regulation? The purpose is to ensure that MSME work smoothly, they stay competitive, and they follow responsible practices. Now friends, the government plays two roles. The first role is for regulatory and the second role is for protective. So what is regulatory role? So how it play regulatory role? By imposing norms and restriction. And how it play protective role? By offering incentive, by offering supports and safeguard. So now if we talk about the government measures for MSME promotion, we have the administrative framework. So to promote MSME, we also have administrative framework. The Department of Small Scale Industry manages the overall administration, right? So Department of SSI, they manage and supervise the overall administration of the SSI. The apex body is called SEDO. SEDO full form is Small Industrial Development Organization, right? Which is headed by the Development Commissioner. It runs Services Institute, it run Branch Institute, it run Extension Center, Field Testing Center, Production Center, and even Footwear Training Center. So what are the things under administrative framework? First of all, the Department of Small Scale Industry manages the overall administration. Okay, and the apex body is called SEDO. And at the district, we have District Industrial Center, we call it DICs. So these are the apex body. SEDO acts like an apex body headed by the Development Commissioner. And with these so these are not that much important. And at district level, it is headed by DIC with our 422 center. How many? 422 center across almost all districts. They act like a single window hub for a small entrepreneur, giving training, credit support, advisory services, etc. Now let's look at the key institutions supporting MSME. So what are the key institutions? So basically the National Institute of Small Industries Extension Training, or we call it NISIET. National Institute of Small Industry Extension Training. They provide research, training and consultancy services. Then we have NSIC, National Small Industry Corporation. They support marketing. They help in government purchases. They even supplies machinery on hire purchase to reduce capital cost. Now talking about the policy instrument, these include financial incentive like loan and grants, fiscal incentive such as tax exemptions, and general incentive like easier regulation. A special focus is also given to backward area with targeted scheme, and certain products are even reserved exclusively for a small scale industry to ensure fair participation in the market. Now friends, let's talk about the key measures to protect MSME. So first of all, we know that financial incentive. SIDBI provides support for marketing, industrial estate and machinery. Startup benefit from seed capital, national equity fund, while liquidity comes from bill discounting scheme. State also offers subsidies on interest, electricity, water, land and capital investment. If we talk about the fiscal incentive, MSME enjoy tax holiday, investment allowance, extra depreciation on new machinery. State may also give electricity tariff exemption. If we talk about the general incentive, so a small unit get exclusive purchase reservation, price preference in government procurement, and a scheme like SEUUY to promote self-employment among educated youth. Full form is Self-Employed Scheme for Educated Unemployed Youth. Now we have special incentive in backward area. So entrepreneur get concessional finance, transport subsidies and even income tax relief to encourage industry in the underdeveloped region. Now if we talk about the reservation of items, so some products are reserved only for MSME, protecting them from large scale competitor. In short, these measures aims to boost growth, reduce cost and provide a fair market for MSME. So that is called reservation of item. Now let's look at the government initiative for MSME. So friends, let's talk about some major government initiative for MSME and industrial development. So we have sector specific statutory board. What are the sector specific statutory board? Like Khadi and Village Industry Board, right? And Handloom Board is there. Then we have Handicraft Board. Then we have Code Board. Then we have Sericulture Board, Small Scale Industry Board. So these boards focus on promoting rural industry, supporting artisans, modernizing traditional sector. There is also a Small Scale Industry Board that provide guidance and policy support. Now, another big initiative is the creation of the Industry Estate, which is a special area equipped with infrastructure, factory shed, basic amenities. So these estates provide entrepreneur with a ready-made environment to start and grow their business. In short, these steps ensure that MSME get the right platform, right support and ecosystem to thrive. Now let's talk about the National Manufacturing Competitiveness Council. In short, we call it NMCC. So the National Manufacturing Competitiveness Council proposed a three-pole strategy: industrial, artisans, and agro-based culture. That is called three pole. On one pole industrial, second pole artisan, third pole agro-based cluster. Why? To boost the manufacturing. The idea is simple. Cluster act like a growth pole for industrial development and even promote collaboration between Indian MSME and those from other developing nations. So we basically cluster, they act like a linkage, they act like a growth pole. For what? For industrial development and promoting collaboration between Indian MSME and those from other developed nation, right? So cluster is acting like a growth pole for industrial development, and they collaborate between MSME, Indian MSME, and other nations and developing nations. Now to promote MSME, the Interest on Delayed Payment Act, right? So the Interest on Delayed Payment Act ensure buyer clear due within 120 days. Any delay attract interest at 1.5 times as SBI prime lending rate, or we call it PLR. So this is called Interest on Delayed Payment Act. Friends, if you really think that this content is useful for you and you are able to understand each and every fact, please hit that like button. This will motivate me to make more such and such content, and this content will reach other MSME aspirant also. Now friends, let's come back to our discussion. We are talking about the Interest on Delayed Payment Act. What I told you, that to protect MSME, Interest on Delayed Payment Act ensure buyer clear dues within 120 days of goods acceptance, and any delay attract interest at 1.5 times the SBI prime lending rate. Some major initiatives include Pradhan Mantri Rozgar Yojana 1993 scheme launched in the year 1993. So this Rozgar Yojana aimed to create 1 million jobs by supporting tiny and micro enterprise. Then we have industrial cluster development. So it was also promoted to help MSME share resource, opportunities and risk. For export, MSME receive financial aid for trade fair, exhibition and even marketing research, right? Plus a scheme like zero duty on capital good and special recognition and as export on trading house encourage global participation. So zero duty on capital good extended to MSME without condition. Then so some more points we have other important scheme for MSME. Let's have a look. So friends, let's look at some important government scheme for MSME. First is called IIDS, Integrated Infrastructural Development Scheme, IIDS. So the government contribute 5 crore in 2:3 ratio to develop industrial infrastructure in rural and backward area, linking agriculture with industry. It is called IIDS. Again, I am repeating the full form. In Integrated Infrastructure Development Scheme, government how much contribute? 5 crore. For what? In 2:3 ratio sharing. For what? To develop industrial infrastructure in rural and the backward areas, right? Linking agriculture with industry. Now the Marketing Development Assistant Scheme. Again and again we are talking about this. In short, we call it MDA scheme. It started in the year 2001. It support MSME in participating, right, in international trade fair, publicity material, overseas market studies, and even anti-dumping cases. Then we have TREAD scheme for women entrepreneur. So it is designed especially for women entrepreneur. It provides loan, grant, training, counseling to help them start and grow trade related venture. Then we have preferential government purchase scheme. It makes it mandatory for government department to buy certain item directly from MSME, ensuring steady demand and support. So friends, what is the TREAD scheme? This is for women entrepreneur. Especially it provide loan, grant, training, counseling to help them start and grow trade related venture. Then finally we have the preferential government purchases scheme. It make it mandatory for government department to buy certain item directly from MSME, ensuring a steady demand and support. Now let's look at the key component of the government regulatory framework for MSME, essential elements. Now friends, so that is all about, we are talking about the regulatory framework. So friends, Let's understand the key component of the government regulatory framework for MSME. First of all, registration and licensing. So every MSME must follow mandatory guideline to start and operate. Second thing is financial support. Means the government provide loans, subsidies, grant to encourage the growth. Third is the tax policy. So reduce rate, exemptions and simple compliance procedure. Then we have fourth the labor law. It covers the wages, working conditions, social security benefit. Fifth, we have the environmental norms. It ensures eco-friendly and sustainable practices. So to navigate the framework effectively, MSMEs should stay updated with the latest regulation. They should seek guidance from the government agency. They should use professional expertise for compliance, maintaining proper documentation, making the best use of available scheme and incentive, networking with peers and participating in the consultation. This also help. Now on the legal side, the Industrial Development and Regulation Act 1951 laid the foundation for regulating the small industry. Later, the MSME Development Act 2006, brought into effect from 2nd October 2006, created a unified legal structure to promote, to develop and to enhance the competitiveness of MSME. In short, the regulatory framework ensures that MSME not only grow but also remain compliant, competitive and sustainable. Now friends, let's look at the classification of enterprise. So friends, if you look at the classification of enterprise, basically earlier manufacturing enterprise were classified based on investment and plant machinery, right? So this was the earlier classification pre 2020 criteria. So hardly it will not be asked, just have a look at it. Up to 25 lakh micro, above 25 to 5 crore small, 5 to 10 crore medium, and for service enterprise this was the criteria. Then came the big change on the 13th May 2020. Now classification is based on investment and turnover. The limit were increased to cover more businesses. Also the old distinction between manufacturing and services were removed. Means a single common definition for all. But a few clarifications were still pending. For example, whether the criteria will be investment and turnover or investment or turnover, and whether trading activity will be included or not. A formal amendment was also awaited to give legal effect to these changes. Now let's look at the revised classification, very important. So revised classification is now criteria become investment and turnover, so both to be considered. First of all, that is and means both to be considered. Micro means investment should be less than 1 crore and turnover should be less than 5 crore or equal to 5 crore. Small investment means investment should be less than 10 crore, turnover should be less than equal to 50 crore. So 110 50, this way you can remember, and just multiply by 5 to get turnover. In terms of investment, 110 50 and multiply each one by 5 to get turnover, right? So now let's look at the key highlights. First of all, we have the unified criteria. So no separate rule for manufacturing versus service enterprise, right? So no separate rule for manufacturing versus service enterprise. That is called unified criteria. Now broader coverage, higher investment and turnover limit bring more businesses under MSME. That is called broad coverage. Then we have clarification is awaited whether classification is based on investment and turnover, both condition, or investment or turnover, either condition. So this clarification is awaited, and whether trading activity are covered under MSME or not, it is also awaited. Formal amendment in MSMED Act 2006 awaited for complete implementation and legal update. Now let's talk about the competition of investment, plant and machinery / equipment. So what are things which are included? So which are counted for investment, like original purchase price, imported machinery cost including shipping, custom duty, GST and VAT. What are the things that are excluded, which means not counted for investment, like tools, jig, molds, spare, consumables, installations and R&D, installation charge and R&D equipment, pollution, power generation, transformer, electricity, electrical infrastructure, gas producer plant, transport cost of domestic machinery, technical know-how and erection charge. Then storage tank not used directly for manufacturing, firefighting equipment, bank or service charge paid to NSIC or SSIC. So these things are not counted for investment. So what are counted, what are not counted, please remember it, because because once you know what are counted, then only you can calculate the total investment, like original purchase price, shipping, custom clearance, import duty, these are counted. But what are excluded for investment, installation and R&D equipment, power generation, electricity infrastructure, gas production plant, technical know-how, these things are excluded. Now in short we can say pre-2020 it was based on only on investment with different limit for manufacturing and service. After 2020, post 2020, it was based on investment plus turnover with no sectoral distinction. Now friends, let's look at exclusion and investment calculation for plant and machinery. Very important aspect we are talking about. So while calculating investment in plant and machinery, certain items are excluded. And what are those? I think we have discussed these items: tools, consumable storage, installation charge, R&D equipment, etc. And transportation charge for machinery, know-how, fees, storage tank, firefighting equipment, and beyond this, land building, vehicles, furniture, office equipment, they are also excluded. Now one more point is that it was designed to make MSME regulation simple and hassle-free. Now let's talk about the UAM, Udyog Aadhaar memorandum. ये क्या वो okay, what is this? Basically for MSME this is one of the easiest registration process, right? So it easiest registration process introduced under the MSME Act 2006, right? So basically what happened, it is completely online, it is completely free, right? No fee is no fee is taken, and the portal is also very user friendly. Registration is based on the self declaration, right? Basically you did not submit any kind of document at the time of initiation. So it is online registration, simple, paperless, no supporting document required initially for self declaration. Now basically one Aadhaar number can be used for multiple registration, right? So from one Aadhaar number you can file multiple UAM, right? Suppose one person have two different business, so he can also register using one Aadhaar number. And it imposes flexibility, right? Whether you are manufacturing or whether you are service, right, it cover everything. So flexibility is there, it cover any kind of activity. Then we talk about the identification detail. So the first identification detail is a proprietor, partner or karta, right? So for them you need to give them Aadhaar number. Then we have the companies, LLPs and trust, right? So for them PAN plus Aadhaar of authorized signatory, they are required. So what is required as identity proof? I told you that proprietor, managing partner, karta, Aadhaar number, and for company PAN of the entity plus Aadhaar of the authorized signatory. And now for verification, OTP based Aadhaar OTP verification is done via mobile link to Aadhaar. Completely online, it is completely free. Self declaration is filed on the it is filed on the self certification basis. Multiple UM is there, activity flexibility is there. I told you about all these things. What about the acknowledgement? So UM generated an email upon filing, right? And alternative filing, applicant without Aadhaar or online may submit form 1 to DIC MSME DI, which will upload on their behalf, right? So this is the point. So this system, it has substituted the earlier entrepreneurship memorandum 2. Earlier there was a system that is called EM2, and the UM has replaced the EM2, right? So enterprise which are already registered under EM2 or SSI, they did not register but may opt for UM. What about the DIC authority? So general manager authorized to verify the detail and resolve the discrepancy. So DIC authority यानी डिस्ट्रिक्ट इंडस्ट्रियल सेंटर कि जनरल मैनेजर को डिटेल वेरीफाई करने और डिस्क्रिपेंसी रिजॉल्व करने का अधिकार है. So friends, UM has made the registration of MSME very easy, right? So collateral. Now let's talk about the benefit of MSME registration. So MSME registration open the door to powerful benefits like collateral free loan up to 500 lakh, or you can say 5 crore collateral free loan under the CGT MSE scheme. Second point is prepayment protection, means buyer must pay within 45 days as they pay interest at 3 times the bank rate. So that is called payment protection. Third point is TRDS platform. So access to the TRDS platform where MSME can easily discount trade receivable through multiple finances. So because of these three reasons, this particular business is beneficial. Now let's look at the additional MSME support scheme. So there is something called financial assistant. So in this case, you might have heard about interest equalization scheme, where 5% relief is given on export credit, bank credit facilitation via NSIC. So term loan, working capital, and non-fund based credit like guarantee and LOC are given. Now basically let's look at the technology and quality upgradation. First thing is the CLCSS, right? So what is CLCSS? In this case, 15% capital subsidy for technology upgradation. Then we have ISO certification reimbursement. So what happened in the ISO certification reimbursement? So you can see up to 75,000 and 75% fee reimbursement. Then we have credit rating support. So credit rating support and energy bill concession, right? This is in the context of technology and quality upgradation. Now what about the market and financial support? So priority sector lending says that bank must allocate fund PSL benefit continue for 3 years even after upgradation. That is called market and financial support. Now we have something called barcoding support. So what is this barcoding support? 75% reimbursement for first 3 years. This is called barcoding support. And MSME scheme are demand driven, means that there is no cap on subsidial disbursal in a year. There is nothing like cap. It depends on the demand. Now friends, let's talk some additional points and additional MSME support scheme. So the first one we have is called the raw material assistant scheme. So basically what it is. So it provides finance up to 90 days so that MSME can buy raw material whether domestic or imported. It helps them manage input on credit and complete the pending order. Now the single point registration scheme, or we call it SPRS, right? So basically under the government store purchase program, by registering here MSME or micro and small enterprise, they get big benefit like free tender set, exemptions from earnest money deposit, and preferential in the government procurement. So by registering here they get this kind of benefit, or we call it EMRD. Now friends, what is this SPRS scheme? Single point registration scheme under the government store purchase program. So by registering here, micro and small enterprise get big benefit like free tender set, exemption from EMD, and preference in the government procurement. Then we have the stamp duty and registration fee exemption, where new industrial unit in public IT park are exempted from paying this charge. During COVID-19, the government announced the Atmanirbhar package, right, which includes the emergency credit line up to 20% of the outstanding loan fully guaranteed by the government. The loan tenure was 4 years with a 1 year memorandum, and it was valid till October 2020. That is called emergency credit line, right? Then we have the subordinated debt scheme. This subordinated debt scheme was 20,000 crore, right, supported for stressed and NPA MSME, where the government covered the first 20% loss. Then we have the fund of fund scheme. So this is a 10,000 crore corpus to provide equity to growth oriented MSME, right? So procurement reform were also introduced. For example, global tender up to 200 crore were banned, giving preference to the domestic MSME. Plus the government made it mandatory for CPSE to clear MSME dues within 45 days. So remember this deadline, 45 days. Apart from these, there are ongoing support scheme like term loan for expansion, working capital loan for smooth cash flow, CLCSS, which provide 15% capital subsidy for technological upgradation, ISO certification reimbursement, where 75% fee support is provided. I told you early, maximum 75,000 rupees per unit. We have credit rating support, energy concession, barcoding support. Again, I am telling you that 75% reimbursement on registration and renewal fee for first 3 years, right? So these kinds of extra support are being provided. So in short, we can say MSME have a wide variety safety net of scheme ranging from finance and technology upgradation to procurement benefit and relief packages. Now friends, let's talk about a small and medium enterprise development scheme. So the Small and Medium Enterprise Development Bill 2005 was introduced in Lok Sabha on 12th May 2005 and later reviewed by the Parliamentary Committee on Industry. The bill clearly defined and classified a small and medium enterprise while empowering central and state government to frame supportive policy and scheme. It also simplified inspection procedure to ease compliance and introduced provision to address delayed payment to a small enterprise. Importantly, it repealed the 1993 Act on delayed payment, merging it into more comprehensive framework. So repeal of the 1993 Act, right, which was the Interest on Delayed Payment Act, and integrated into the new framework. Now, proposed classification of enterprises. So the bill apply. So there is a bill, 2005 bill, right? This is called First Schedule of Industrial. So basically, the bill apply to the industries listed in the First Schedule of the Industries Development Act 1951. So small enterprise, investment in plant and machinery up to 5 crore. Services, I think this was the earlier definition, so no need to go through it again. Now, advisory provision. What does it say? So, a central advisory committee will recommend the classification norm. The government can revise limit and even consider employment and turnover. What about the memorandum filing? I told you, medium enterprise, for medium enterprise it is mandatory filing with the center, and for the small enterprise it is optional depending on the state regulation. Now we have NB MSME board, and that's called National MSME board. So it is an advisory body to guide SME policy. Its member include central and state ministers, RBI representative, industry institution, and 10 SME association member plus an economist and industry expert. That is called NB MSME. Now, what are the measures which has been taken to promote to small and medium enterprise? Let's have a look. Very, very important aspect. So basically the government support SME through skill development, marketing aid, better infrastructure facility. A state government can even provide relief by exempting a smaller enterprise with less than 50 employees from certain labor law, like the Employees Liability Act, Weekly Holiday Act, Employment Exchange Act, and Apprentice Act. On the financial side, RBI issues guideline to improve the credit access. So on the financial side, RBI improve guideline. RBI basically issues guideline to improve the credit access, while central and state government encourage SME through preferential purchase policy in the public procurement. Now, to reduce red tape, inspection are now simplified with self-certification and self-regulation framework. The SME Development Bill 2005 are also now friends, a state government can even provide relief by exempting a smaller enterprise with less than 50 employees from certain labor law like the Employee Liability Act, Weekly Holiday Act, Employment Exchange Act, and the Apprentice Act, right? So this can be done by the state government. Fine. Now, to reduce the red tape, inspection are now simplified with a self-certified board. I told you about this early. Advisory committee, flexible criteria, board composition. So here you can see, right, credit guidelines I am talking about. To reduce the red tape, inspection are now simplified. The SME Development Bill 2005, why it was there? So basically it introduced the advisory provision. Right, including an advisory committee to define the classification norm, provide flexibility to revise investment threshold, and an enterprise memorandum system where medium enterprise must file detail while a small one may do as per their state rule. Right, so this is mandatory filing for medium enterprise memorandum, and a small enterprise is optional as per the state development. Finally, a national MSME board was set up to recommend policy. The board include ministers, secretaries, RBI official. We have talked about it. Now let's look at some more point regarding the SME Development Bill. We have just talked about now. So what are the measures to promote SME? Central program like a scheme for skill, marketing and infrastructures, right? Then we have exemptions. State may exempt SME less than 50 worker from certain labor and compliance law, credit guidelines to be framed by RBI, and procurement policy preference for SME in government and PSU purchase. If you look at the inspection and regulation, self-regulation means inspection to follow self-certification norms, and then record compliance. So burden on SME has been minimized. Now if we talk about the maintenance of record, right? So maintenance of record, SME to maintain prescribed record and file return with central government. What about the delayed payment provision? So no agreement. So payment timeline is buyer must pay within 30 days. No agreement. If it is no agreement, maximum 30 days. If it is with agreement, maximum is 75 days. And penalty is the bank rate plus 9% on delayed payment. Dispute resolution by industry facilitation, right, which is a state government body. Industry Facilitation Council. Then appeal allowed only if 75% of the disputed amount deposited upfront. Mandatory disclosure, which means buyer must disclose unpaid due and interest in annual account. Such interests are not tax deductible. Then the framework standard, the SME protection, simplified the compliance, ensure timely payment. Now let's look at the Udyam registration. So it is an official electronic registration certificate for micro and small and medium enterprise. You can think of it like a digital identity card for your business. So the old UAM, Udyog Aadhaar memorandum system has now been scrapped and replaced by the Udyam registration. So this is of the voluntary nature, which means it is not compulsory, but registering brings huge advantage. So while optional, it is highly recommended for business. Advantages are easy access to loan and credit, eligibility for subsidies, government procurement preference in tender, and other incentive under MSME scheme. Now what is the registration process? So first of all, you just provide your detail, business type, turnover, employment, right, on the portal. No documentation is required. You don't need to upload PAN, Aadhaar, GST or any supporting certificate, right? Then the entire process is digital and are user friendly, and you get your Udyam certificate instantly once you apply. So in short, Udyam registration becomes simple, paperless, and rewarding. Now Udyam registration number, let's talk about it. So basically every enterprise that registered under Udyam get a unique permanent identity number, which is called Udyam registration number. So after the registration, so after registration, an e-certificate is required, and this e-certificate serve as an official proof of the MSME status, making the unit eligible for government scheme, incentive, and support program. That is called e-certificate. Now, who can register? So user engaged in trading, manufacturing, and services that meet the prescribed limit, they can register. For example, a micro enterprise means investment in plant, machinery, and equipment up to 1 crore, and an annual turnover up to 5 crore. I think you know it. So Udyam registration we have talked just now. Electronic form should be submitted. So electronic MSME certificate issued by the government of India, replacing the Udyog Aadhaar memorandum. Right, it is a voluntary process, but it offers significant advantage for MSME. It provides access to government benefits, subsidies, incentive, and scheme. Now, if you look at the registration process, it is based on self-declaration, fully digital, paperless, no document submission is required. On successful registration, enterprise receive a unique and permanent Udyam registration number. We call it URN. URN means Udyam registration number. An e-certificate, which is called Udyam registration certificate, issued as a proof. If you look at the eligibility criteria, so here this table you can see that micro enterprise up to 1 crore, right, annual turnover up to 5 crore, small enterprise up to 10 crore, annual turnover up to 50 crore. I think that part has missed, right? Now medium enterprise 10 to up to 50 crore, and annual turnover is up to 50 crore. So what is the benefit of Udyam registration? Let's have a look. Because it provides you easy bank loan under priority sector lending, eligibility for government subsidy, exemptions and concession, access to schemes like CGTMSE or called Credit Guarantee Fund Trust, and CLCSS, which is called Credit Linked Capital Subsidy Scheme. Now we have something called legal protection against delayed payment from buyer. Yes. So what are the legal protection legal protection against delayed payment from buyer? So eligibility to register on GEM, that is called Government E-Marketplace, and TREDS, that is called Trade Receivable Discounting System. MAT means minimum alternate tax, credit extended from 10 to 15 years. So this point we are talking about the benefit of the Udyam registration. Then facility for one-time settlement of dues to ease the financial stress. Now friends, what are the eligibility for Udyam registration? Already I told you. Right, so let's have a look. So friends, Udyam registration is open to a wide range of business entity, whether you are a proprietorship, whether you are a partnership firm, whether you are an HUF, whether you are an OPC, right, public company, LLP, producer company, cooperative society, a smaller undertaking, all are eligible for it. The only condition is that your enterprise must fall under the MSME classification norm. Now friends, let's talk about the benefit of Udyam registration. So what is the benefit? So once you are registered, your business upload exclusive government support, including scheme. Let's talk about Udyam registration for MSME. It is open to wide range of business, proprietorship, HUF, partnership firm, OPC, private and public limited company, right, producer company, LLP, association, cooperative, and many other. And to qualify, enterprise must meet the MSME threshold, which is investment up to 50 crore in plant and machinery and turnover up to 250 crore. Right. So what are the benefits? Access to government schemes, seamless integration with IT, GST and GEM, government e-marketplace, priority sector lending, easier bank loan at lower rate, extended MAT credit, forwarded up to 15 years, and lower interest rate, typically 1% to 1.5% less than the normal. In short, we can say Udyam registration open door to growth, saving, and government support for MSME. Now the conclusion is that from this discussion that Udyam registration is a gateway for MSME to unlock powerful government scheme, loan, and incentive. While it is voluntary, early registration ensure quick access to support and opportunities. So what are the documents required for Udyam registration? So to register you need just few documents like PAN card of the enterprise, Aadhaar number of the concerned person based on the business type, whether it is proprietor, managing partner, karta, or authorized signatory. GST number you require only if GST registration is mandatory. That is simple document, big benefit. Right. Now, what are the steps to obtain Udyam registration online? So let's look at the step to obtain Udyam registration online. So first of all, you visit the official Udyam registration portal and choose the option for new entrepreneur not registered at MSME. So on the home page, you click on the option for new entrepreneur not registered at MSME or those with EM2. So friends, first of all, visit the official Udyam registration portal and choose the option for new entrepreneur not registered on MSME. Okay, then enter your Aadhaar number and name, validate with OTP, move to the PAN verification, select your organization type, provide PAN detail, confirm it ITR and GST-IN are applicable. Next, fill in the Udyam registration form. So these are the steps, right? These are the steps for registration. So in that case, you should fill all the details. So we're no need to go through each and every detail, right? These are the steps. Now let's look at the investment and turnover declaration. After filling the detail, you must complete the investment and turnover declaration by selecting the correct option. And finally, enter the final OTP sent to your registered mobile and submit the form. Once successful, your Udyam registration certificate will be emailed to you. This certificate is completely online and even has a dynamic QR code for instant verification. The best part is that Udyam registration certificate is permanent, no renewal is required. This saves time and effort, letting you focus on growing your business. Then we have the credit evaluation process. So what is this? Before granting loan or credit card, bank perform due diligence, basically checking the customer financial health, right? So for this, they rely on the CIC, that is Credit Information Company, which are independent third party that collect and share the financial data. So a credit report is prepared. The report includes loan, credit card history, repayment behavior, and other financial transaction. So based on this report, a credit score is generated, a simple number that represent your credit risk. So bank and NBFC use this credit score to approve or reject credit request. Most importantly, CIC ensure accuracy because they collect data only from reliable and authorized source. So in short, CIC provide the backbone of the credit evaluation process, helping lender take safe and informed decision. Now have a look at the key highlight on the credit report and credit score. So friends, these are the most critical indicator of a personal financial health. Bank and financial institution always check them before approving loan or credit card. So in India, CIC handle this process. They are licensed and they are regulated by the Reserve Bank of India. So these company function under the Credit Information Company Regulation Act 2005 along with the rules framed in 2006. Now who can access this report? So mainly bank, NBFC, other authorized entity, they can access this report. So we are talking about who are the authorized member of CIC. So bank, NBFC, other authorized entities and individual, they can access. And here is an important compliance rule. Credit report must follow an RBI approved format and the information has to be disclosed within a set time frame to ensure accuracy and reliability. In short, credit report and score are the backbone of financial decision making. Now friends, CIBIL was established in the year 2000 as India's first credit bureau. It has over 900 members including bank and NBFC and issues the famous CIBIL score, a key factor in loan and credit card approval. Next we have Equifax. So Equifax, so it was originally founded in the year 1899 in Atlanta. It entered India in 2010. It even run a microfinance bureau to support microfinance institution. Experian. So Experian launched in the year India in 2006, a joint venture with bank recognized globally for innovation. It compiled credit report and uses data from multiple financial institutions. High Mark Credit Information Services. It was founded in 2005 in Mumbai. It serves individual, SMEs and commercial borrower. Its reports are widely used by bank and it charges only a nominal fee for issuing credit report. So together these four CIC plays a vital role in shaping credit decision across India. Experian, Equifax, CIBIL and High Mark Credit Information Limited. Please remember this name. Now we talk about the DNB report highlight. So this is called Dun and Bradstreet report, a key tool to measure a company credit worthiness. So these business credit reports are used by lender and partner during payment negotiation. Companies can generate them themselves or they have creditor created them. Why it matter? Late payment reported to DNB can hurt your business credit profile. So always monitor your report online. Now if your company is not listed yet, so you can create a free DNB report by getting a DUNS number. So you can get a DUNS number and you can create a free, if your company is not listed, you can create a free DNB report and submitting your company detail. Remember, business credit report have fewer regulation. Any party can access your report. So incomplete or negative data can impact your reputation. So managing your DNB report effectively is essential for a smooth business operation and trustworthy lender. Now what are the key components of DNB reports? So company basics will be there, general information, business history, registration detail. So company basics must be there. Then government interaction, which means activities involving government agencies, operational metrics like insight into the company operation and industry context, financial information like up to 3 years of financial statement voluntarily submitted, public record, liens, judgment and other legal finding. Then payment behavior like timeliness of payment to creditor and vendor. So why it mattered, voluntary data submission ensure accuracy without forcing proprietary disclosure. So what are the key score in DNB report? First is the PAYDEX score in the range of 1 to 100. So it track payment timeliness. 100 means excellence. Then we have the credit score 101 to 670. It predict default risk. 670 means lower risk. Then we have the financial stress score in the range 1001 to 1875. It estimates the failure risk. So 1875 means minimal risk. So PAYDEX score, credit score and financial stress score. Remember these are the three score. PAYDEX score 1 to 100, 100 means excellence, credit score 670 means lower risk, financial stress score 1875 means minimal risk. So DNB rating and viability rating reflect the overall financial strength and stability. Now if we talk about the importance of the DNB rating, so credit worthiness assessment. Why is this DNB rating so critical for business? Because supplier and creditor rely on it to judge the financial reliability. Report creation. Business can proactively generate their own report to ensure accurate information. Negotiation advantage. A strong DNB report helps secure favorable net 30 payment term, reducing reliance on expensive short-term financing. And finally, cost efficiency. So it avoids high interest loan or invoices factoring that can range from 15% to over 60%. Right. So while you are negotiating with vendor, so when to check your DNB report? While negotiating with vendor, while applying for loan or finance, while lease agreement and renewal, while bidding on contract, while evaluating investment opportunity. In such cases, you should check your DNB report. What are the significance of DUNS number? It enables an independent objective DNB report. It maintains accurate up-to-date business information, free application and report generation. So a well-maintained DNB report strengthens credibility, improve financial terms and ensure a smooth business operation. Now, how to access and maintain the DNB report? So it is quite simple. Generation and access. So report can be created by creditor or the company itself and it can be viewed by vendor, lender and partner. What about the transparency? So it offers an independent comprehensive view of the credit profile including industry context. What is the opt-out option? So business can withhold certain information while obtaining a DUNS number. What about accuracy and monitoring? So regular updates are essential. Review your DNB account at least quarterly to avoid credit evaluation based on outdated data. So executive summary component include company basic, DNB rating, PAYDEX score, predictive analytics. These are the very important things. Right. Now friends, there is something called MIRA report, which is called Minesh Gandhi. Right. So meet Minesh Gandhi, the visionary founder and managing director of the Mina Inform Private Limited, a leading credit information service provider. He started his journey in the year 1978 with Mercantile Information and Reference Agency, which we call MIRA. Right. So while he was studying at the Narsi Monji College, Mumbai. Right. So he started his journey with Mercantile Information and Reference Agency. By 1983, he evolved it into a joint stock company, which is called MIRA Inform Private Limited. Trusted globally, MIRA Inform serve bank, financial institution, credit insurer, legal firms, consultants, multinational company. It provides high quality credit opinion and business information report. With over 30 years of industry experience, the company has won prestigious awards like IIMM, ASSOCHAM, European Quality Award. So MIRA Inform empower smart business decision through research-driven insight, resolving complex business challenges, a robust global corporate database for accurate, timely information, a diverse credit risk management report to evaluate the credit worthiness effectively, and finally, transforming risk into a strategic report, right? A strategic opportunity for business worldwide. In short, Minesh Gandhi and MIRA Reform are pioneers in delivering trusted data-based credit solution that enables informed and responsible business decision. So let's look at some of the key features of Mira report. So Mira Informed Credit Report provide a detailed, reliable view of any company profile and financial health. So company overview like corporate history, registration detail, contact info, MSME certification course, module C quick revision PDF, and that module C is related to institutional framework and MSME financing. So I have already provided you module A, module B, quick revision session. If you have not watched those sessions, please check the description section of the video. You will get the link of them. So now similarly, I am going to provide I'm going to explain all the important points in lucid manner, easy to understandable manner. So let's get started. First of all, when we talk about the growth of MSME in India, one key player is SIDO, which was set up way back in the year 1954 under the Ministry of MSME. You can think of SIDO, right? You can think of SIDO as a guide, as the backbone for small businesses. It not only gives direction but also launches initiative to make MSME more competitive. Over the year, it has played a big role in boosting India's economy and nurturing the entire MSME ecosystem. Now, what exactly does SIDO do? So first of all, it acts like the voice of the MSME, representing their needs and ensuring policies are designed in their favor. Second thing is that it focuses on capacity building by organizing training program, workshop, session on modern technology, marketing and export. In short, it helps entrepreneur build a strong skill and become fully ready. So what we have just discussed, let me summarize. I told you, SIDO act like the backbone of the MSME since 1954. They give guidance plus boost competitiveness. They represent MSME in the policy matter. They build skill through training and workshop, and they support long-term sustainability and entrepreneurship. So now let's talk about the financial support. So friend, that if you talk about the financial support and credit assistance, so first comes SIDO. We are talking about the roles played by SIDO. So SIDO help a small business get fund through government schemes and banks, whether for starting up, expanding or modernizing. It even guides them in preparing project report and loan application so that bank trust their credibility. Next is technology and innovation. So SIDO encourages MSME to adopt modern tools and innovative methods. It also connects them with the research body and tech center to get the right technical advice. Then come the market expansion and export promotion. So to showcase MSME products, SIDO organize expos, trade fair, buyer-seller meets. This way, business can reach both Indian and the global market and grab new export opportunity. Then we have cluster development and infrastructure. So instead of working alone, MSME are encouraged to form cluster in different regions. This helps them share facilities, cut cost, and become more competitive together. So to summarize, financial help through schemes, bank and loan guidance, promote modern technology and innovation, expand reach via expos and export support, and build international cluster with shared facility. Now friends, let's look at empowering MSME, the role of SIDO. So SIDO always have worked to empower MSME by focusing on inclusive and balanced growth. So first is called inclusive growth. So by supporting a small industry, especially in the rural and underdeveloped area, SIDO help create job and opportunity. It also builds the capacity of entrepreneur through skill training and financial support. Then to the context of women entrepreneurship, to promote gender equality, SIDO provide special training, funding, mentoring for women-led business, helping them actively participate in economic growth. Third is the rural and cottage industry support. So SIDO encourages traditional industry to modernize, diversify their product and connect with the bigger market. At the same time, SIDO protect local craft and skill, making rural industry more competitive. So to summarize, SIDO promote job and entrepreneurship in rural area. SIDO have a special focus on women-led enterprise. SIDO support traditional and cottage industry with modern upgrades. So friends, SIDO has been a key driver in pushing MSME forward through innovation, finance and market access. First of all comes innovation and technology. MSME are encouraged to adopt modern tools and practices. This not only improve productivity but also make them more competitive. So that is called innovation and technology. Second is the access to the finance. A small enterprise often struggle with capital. So SIDO help them secure credit and financial support, ensuring that they can grow without facing funding roadblock. Third is the market access and export. By organizing trade fair initiative, SEDO connect MSME to both domestic and the global customer. So this open new export opportunity and growth avenue. Now let's look at the impact of SEDO on MSME development. So it create employment, especially in the rural and semi-urban region, reducing poverty and driving inclusive growth. Second point, it boosts the competitiveness by improving productivity, skill and market linkage. Third is, it promote entrepreneurship. And finally, it contribute to export growth, giving MSME global platform and enhancing India's export earning. So these are the basically advantages of SEDO. Now friends, let's look at the next point that we have lasting impact and future of the SEDO. SEDO work has left a lasting impact on India's MSME sector because its present contribution are quite significant by creating more job across different regions. It has fueled employment growth. At the same time, it has improved the competitiveness of the MSME, right, making them stronger and more resilient. Most importantly, SEDO has promoted inclusive development, ensuring that progress reach every section of the society. Looking at the future, the focus will remain on innovation, supportive policies, and expanding market opportunity. So by reinforcing these efforts, SEDO will further empower MSME and drive India's economic growth at a faster pace. So let me summarize the key points. I told you SEDO created job across region, SEDO boosted competitiveness of MSME, it ensured inclusive and balanced growth. A future focus is innovation, policies and wider market and will continue to accelerate India's economic progress. Now friends, let's talk about MSME DI, that is MSME Development Institute. MSME Development Institute, also known as MSME DIs, they were earlier called Small Industry Service Institute or SISI. So they were previously known as SISI. These institutes were set up across different states with one main purpose. Purpose was to guide and train entrepreneur. Right? What was the purpose? To guide and to train entrepreneur, whether they are just starting out or already running their business. So to guide them or to train them, to whom? To entrepreneur. Their core rule, SISI, which is called Small Industry Service Industry. A small industry service institute. So their core goal is to provide technical, managerial, administrative support so that MSME can strengthen their operation and grow sustainably. So in terms of network, MSME DIs are spread widely with 30 institutes across India and 28 branch offices located in key industrial hub and the state capital. So this ensures entrepreneurs everywhere have access to proper guidance and support. So what I told you just now, that MSME DI were earlier called SISI. The aim is consultancy and training for entrepreneur. Function is technical, managerial and administrative guidance. And network, I told you 30 institutes are there plus 28 branch across India. Now friends, let's talk about the key activities of MSME. So MSME Development Institute, or we call it MDI, right, they plays a very active role in supporting the small business. First is the entrepreneurial support. They provide consultancy for both new and existing enterprise. So for new enterprise and for existing enterprise, they provide entrepreneurial support and also run training and motivational program to encourage entrepreneurship. Second is the industrial and market analysis. These institutes, so-called, MSME Development Institute. So these institutes prepare a state and district industrial profile and conduct market studies, helping business understand growth opportunity. Third is the project and business development. So what they do, they design project profile, they guide entrepreneur on export, and they also support allied and ancillary industry. So that is called project and business development, designing project profile, guiding entrepreneur, and also supporting allied and ancillary industry. Fourth is the technology and quality improvement. MSME DI promote energy saving, pollution control, quality enhancement, while also helping business upgrade their technology. So technology and quality improvement is one of the four major functions of the MSME DI. Fifth is skill development and training. So they conduct both managerial and technical training and also operate 42 common facility workshop and lab for practical support. And finally, government and institutional linkage. So they coordinate with the district industrial center, or we call it DICs, and a state body while implementing central government action plan and compiling the industry specific directories. Now friends, let's talk about NSIC. What is the full form? National Small Industry Corporation. It was set up in the year 1955. It is an ISO certified organization. It works under the Ministry of MSME. Being a Government of India enterprise, it also has an international presence with offices in Dubai, Johannesburg to support Indian business in Gulf and African market. The mission of NSIC is very simple. What is the mission? To strengthen the MSME by giving them support in marketing, finance, technology, and other services. Its vision is to become the leading institution driving MSME growth in India. If we come to its core function, so NSIC provide integrated support to small businesses, help them access market and finance, and offer technology upgrade and advisory services. It also plays a vital role in taking Indian MSME to the global stage. So let me summarize the key point regarding NSIC. I told you it was founded in the year 1955, ISO 9001:2015 certified, Government of India enterprise under Ministry of MSME, oversees the office in Dubai and Johannesburg. Mission is to support MSME in marketing, finance and technology. Vision is that premier institution for MSME growth. Function is market access, finance, technology, advisory and global tech. Now friends, let's talk some more points about NSIC. So what I told you, National Small Institute Industrial Corporation or NSIC, it actively support MSME through multiple initiatives. The first initiative is called Scheme Implementation and Facilitation. NSIC act as the partner for the Ministry of MSME, rolling out different government scheme designed for small businesses. Right? So partner for the Ministry of MSME. Second is the technical support and skill development. Through its technical service center, training and incubation center, and livelihood business incubators across India, NSIC provide hands-on technical guidance and training. Third is the entrepreneurship and employment generation. NSIC train unemployed youth in entrepreneurship, help them set up a small venture in manufacturing and services, and create employment by building a skilled workforce. So let me summarize the key point. I told you about NSIC, what they do. They implement government scheme for MSME. They provide technical services via NTSC, that is called National NSIC Technical Service Center, or TICs and UBI. TICs is Training and Incubation Sector, and LBI is the Livelihood Business Incubators. Third is NSIC also train youth in entrepreneurship and support new venture, and it generate employment by developing the skilled professional. Now let's look at some more key functions of NSIC. Let's have a look at it. So the National Small Industry Corporation, remember the full form, National Small Industry Corporation, they plays a vital role in supporting MSME with finance, market, technology and skill. The first is the financial and equipment support. So NSIC make it easier for a small business to get machinery through hire purchase and leasing on simple term. You know about hire purchase and leasing? So by hire purchase and leasing on simple term, right? NSIC make it easier for a small business to get machinery. Second is the market and raw material assistance. So because NSIC, it promote export, right? It participate in the government procurement program. Why? To increase MSME sale and ensure a steady supply of raw material through its depot. Third is the technology and industrial development. So NSIC help industry modernize, upgrade technology, and provide prototype for commercial production. Then we have skill development and infrastructure. Friends, the fourth point is the skill development and infrastructure. It run training program to build workforce skill, encourage entrepreneurship, support enterprise creation in developing nation, and even develop industrial estate to strengthen the MSME infrastructure. So let's summarize the key points. So I told you, easy finance and machinery leasing for MSME, export promotion, government procurement and raw material supply, technology transfer, modernization and upgradation support, training, entrepreneurship promotion and industrial estate development. Now friends, let's talk about the NIES BUD. This is the National Institute for Entrepreneurship and Small Business Development, or NIES BUD. It is an apex body under the Ministry of Skill Development and Entrepreneurship. What is the main role of this institute? The main role is to strengthen the entrepreneurship through training, consultancy and research. 3 words I am telling you: training, consultancy and research. That is the role of the NIES BUD. It also acts like a central agency for coordinating all the major entrepreneurship development program in the country. So central coordinating body for all the entrepreneurship development program. So what are the objectives of it? Its objectives are quite broad. First, it work on promoting entrepreneurship by encouraging people from all sections of the society to take up the business opportunity. Second, it provides institutional support by helping different agencies plan and run entrepreneurship program. Third, it ensures standardized training, which means creating a structured method for entrepreneur selection, training, ongoing support. Fourth, it acts like a knowledge and research hub, maintaining studies, documents and insight that guide entrepreneurship development. And finally, NIES-BUD serve as a platform for policy dialogue, where experience are shared, policies are refined for better impact. So let's summarize the key point. I told you about NIES-BUD. Remember the full form? National Institute for Entrepreneurship and Small Business Development. So it is an apex institute under the Ministry of Skill Development and Entrepreneurship, MSDE. It provides training, consultancy, research for entrepreneur. It promotes entrepreneurship across society. It supports agencies in running program. It standardizes training and entrepreneur development. It functions as a research hub and policy platform. Now have a look at the core function of NIES-BUD. Friends, before proceeding forward, let me tell you, if you want such kind of PDF for fast revision, for quick revision, and if you need unit-wise theory, unit-wise MCQs and previous year question, then you can enroll in our MSME course. The link is provided in the description section of the video, or you can WhatsApp me on the number 8292857381. I am again repeating 8292857381. Right, now let's continue our discussion on the core function. So what I told you, that NIES-BUD plays a very important role in building entrepreneur in India. It works on multiple fronts to make sure that people not only dream of business but also get the right guidance to succeed. First, it creates new and modern training methods or training models so that learning entrepreneurship become practical and effective. Second thing, it uses a scientific way to select potential entrepreneur, ensuring the right people get the right push. Third thing, it prepares a standardized module or ready-made syllabi which can be used by different types of learner. Fourth, it develops training manual, guide and tool that make the learning process much easier. Fifth point, it gives support to institutions and agencies that are involved in the entrepreneurship training. And next point is it organizes a specialized program for trainer, promoter, budding entrepreneur. And finally, it works to create entrepreneurial culture across the country, encouraging more people to take the business route. In short, NIES-BUD train, guide, support, inspire entrepreneur through modern method, a standard tool, a special program, and by building a strong entrepreneurship ecosystem in India. Now friends, let's talk about MSME Testing Center. What it is all about, let's have a look. Basically, if we talk about the MSME Testing Center, in short we call it MSME TC. So earlier these were called regional testing center. Their main job is to maintain quality standards. They provide product testing, they help in improving quality, they give training in quality control, and they even guide industries in setting up proper quality system. On the top of that, they have testing station for product specific check. So earlier they were called RTC or Regional Training Center. Their job was to maintain quality standard, providing product testing, improving quality, give training in quality control, guide industry in setting up proper quality system. Next, there are tool room and tool design institute. In addition to the regional testing center, there are tool room and tool design institute. These are like technical backbone for MSME. They help with the advanced tool, mold, jigs, fixture, and also provide a skill training for tools and die maker. Basically, this tool room and tool design institute ensure that MSME can upgrade technically and produce with precision. Lastly, the MSME Technology Development Center for Footwear, which we call MSME TDC. They started back in the year 1957 with the support of the Ford Foundation, right? So it started with the support of the CFTI. Earlier they were called CFTI, Central Footwear Training Institute, right? So it focused only on the footwear industry. The center runs specialized courses in footwear technology. It promotes modern design to boost export and create a skilled workforce to meet industry need. So let's quickly recap the point which I have just told you. Three things I told you: MSME Testing Center, which focus on quality and product testing; Tool Room and TDI, they provide advanced tooling and skill training; Footwear TDC, they are dedicated to footwear design, training and export. Now friends, let's look at the MSME Technology Development Center, PPDC Agra. Very, very important. Right, let's discuss it in detail. So the center was originally set up. This is also called PPDC Agra, right? MSME Technology Development Center, TDC. So the center was originally set up under a Small Industrial Development Organization, or SIDO. SIDO, a Small Industry Development Organization, which was the government of India. And later on 21st July 1986, it became an autonomous body, right? Which means it started working independently. After the MSME Act came into force, it was officially renamed as MSME Technology Development Center, PPDC Agra. How it is managed? It works under the guidance of a governance council. At the top, the chairman is the additional secretary and the development commissioner of the Ministry of MSME, and the principal director act like the chief executive of the center. So in short, we can say it started under CEDO, became independent in 1986, renamed after MSME Act, governed by a council, led by chairman from MSME Ministry and principal director. Again repeating, it started under CEDO, became independent in 1986. We are talking in the context of PPDC Agra. Renamed after MSME Act, governed by a council, led by chairman. Chairman is from MSME Ministry and principal director. So friends, have you heard about PPDC Agra? It is one of the key institutes set up by the Government of India under the Ministry of MSME. The main aim is to upgrade technology and to upgrade the skill, especially for small industries like casting and forging. So what does it do? It helps industries become more professional through skill development. It supports economic growth by training people and building expertise. It provides common facility like foundry, pattern shop, heat treatment, machine shop, fabrication, event testing labs. So what services are provided? So training program for entrepreneur and job seeker, consultancy services to improve technology, management and quality. What courses are covered? So GST practitioner, entrepreneurship program like start your business and grow your business, digital marketing, Six Sigma certification, yellow, green, black belt, master belt, black belt, project management, data analytics, plus many more skill based program. So in short, we can say PPDC Agra is one stop center for industries and individual. It provides technology, training and consultancy, helping both businesses and a professional grow in today's competitive world. Now friends, let's switch our focus to the DICs. So what is DICs? Let me explain. It was launched on the 1st May 1978 by the central government. Its objective is to promote small businesses and industrial growth at the district level. That's why it is called District Industrial Center. Right. Framework is a single window system to coordinate and resolve the local industry issue. So if you look at the role of the MSME, it helps set up micro, small and medium enterprise. What kinds of services are provided? Guidance, resources, training and support for entrepreneur. These kinds of services are provided. So what is the rationale behind DIC? It tackles economic stagnation through industrial led growth. Right. It tackles the economic stagnation. Second thing is to drive shift from agriculture based to industry based economy. Right. So there's a transition. Right. DIC is set up so as to shift the drive from agriculture based to industry based economy. And you know it very well that industrial growth it means national progress and global competitiveness. And the main rationale is government funded initiative for district level industrialization. And some schemes are like district industrial center loan scheme, prime minister employment guarantee scheme. So these schemes are also implemented. These are called supportive schemes, right? Now the version is I hope it is clear regarding this point. Now let's look at some more role of the DICs. So friends, what are DIC? They were launched way back in the year 1978 by the central government with one big goal, that is to promote small businesses and industry in every district. So what DIC do? They act like a one-stop shop for entrepreneur. They guide new startup and they also support existing small businesses. They help with the approval, permit, finance, training so that an entrepreneur does not have to run away from one office to another. They focus on a lot of rural industry because boosting village level business means boosting the local economy. And of course, they also help generate employment opportunity. If you look at the key function of DICs, so DICs connect entrepreneur with government scheme like DIC loans and scheme and the Prime Minister Employment Guarantee Program, PMEGP. They prepare report to check if a business idea is actually feasible and profitable or not. They help in getting bank loan and other financial support. They also prepare industrial profile of each district, covering things like raw material, infrastructure, opportunity for growth. So to quickly summarize, DIC means single window system for small businesses. They provide guidance, they provide finance, they provide a scheme for entrepreneur. Their aim is to promote industries, reduce dependencies on agriculture, and to create the job. That's why district industrial center are considered the growth engine at the grassroots level. Now friends, let's look at NISIET objective. So let's talk about some very important institutions that support MSME in India. So MSME DI we have already talked about, DICs we have discussed. So MSME DI, what I told you earlier, they were called SISI, spread across all states to train and guide entrepreneur, provide technical, managerial, administrative advice. What about DICs? Their purpose is to promote small businesses at the district level, a special focus on rural industries and job creation. There are some schemes like Prime Minister Employment Guarantee Scheme and DIC Loan Scheme. Now let's shift our focus to the NISIET. Full form is National Institute of Small Industry Extension Training. It began in the year 1960 as CISIET in New Delhi. Later it was shifted to Hyderabad in the year 1962. Founder chairman was the PC Alexander. It was renamed as SIET Institute, later as NISIET in 1984. It is recognized by UNIDO, right? UNIDO recognized, right, as a center of excellence for enterprise promotion. It works under the Ministry of Small Scale Industry, focusing on enterprise growth and training. So let's summarize the key point. MSME DI, they give training and consultancy across states. DIC, they promote industries at district level. So across states, MSME DI, across district DIC, NISIET, national level training and research hub for enterprise promotion. So in short, all these three institutions, basically they exist to guide, to train and to support entrepreneur so that MSME can grow stronger. Now let's talk about the SIIC and SIDC. So friends, basically these are the state government owned body created in the year 1955 under the Companies Act 1956. Their main role is to develop industry by building infrastructure like industrial estate, park and zones. Some states call them SIDC while others use the same SIIC. Right, so remember SIDC, some of them call them and other remain SIIC. Apart from infrastructure, they also finance industries by providing loan and sometimes even invest directly in project through joint venture or subsidiary. Right, so what I told you about SSIIC, right, there is that their main job is to develop industries by building infrastructure. Some state call them SIDC while others use the name SSIIC. Their work goes just beyond funding. They act like an agent of industrialization for the entire state. So what are their objective of SIDC? See, they promote MSME growth. Second point, they encourage entrepreneurship and skill development. Third point, they build a strong industrial infrastructure. Fourth point, they provide marketing and promotional support to the industry. So in short, SIDC and SIIC are like industrial builder plus financial supporter rolled into one, making sure industry grow at the state level. So what I told you about SIDC, let me just summarize. I told you it was set up in the year 1995 under the Companies Act. It is a state owned, because S means a state. It is a state owned corporation for medium and large industry. It build infrastructure like park and estate. It provide loan, investment, marketing support. It work as an engine of the state level industrialization. Now friends, what are the additional roles and functions financial support by SIDC? Let's have a look. That we are talking about two important institutions that help industry grow in India, DICs and SIDCs. So DICs, I told you already, we have discussed in detail about DICs. We support small businesses and local industry in a district level. And SIDC was established by the state government under the Companies Act. In some states, it is also called SIIC, State Industrial Investment Corporation. They focus on medium and largest industrial, right? So if you look at the financial assistance and source of fund, so they give loan. I think I told you that they provide financial support, loan, guarantee, equity in industry. They also help in project identification, survey and entrepreneurial training. What kind of financial assistance provided by SIDC? So they give loan, subscribe to share or debenture and even joint sector project, generally with 26% equity. They develop internal industrial shield, industrial shade, growth center, incentive scheme with the state government. They work with the IDBI, which is the Industrial Development Bank of India, for refinance and long-term loan. And they raise money through state funding, bank, bond and debenture. So let's summarize. DIC, remember district level, focus on a small industry and MSME. SIDC, state level, focus on medium and large industry. DICs provide guidance, scheme and basic support. SIDC provide infrastructure, finance and equity support. Together, they boost industrial growth, they create job and they strengthen our economy. So friends, DIC district level, SIDC state level. DIC provide guidance, scheme, basic support. SIDC provide infrastructure, finance, equity support. Together, they boost industrial growth, they create job and they strengthen our economy. Now, let's look at the promotional program and support by SIDC. So, State Industrial Development Corporation. Some state call them SIIC. Apart from finance, they do more. Like they identify new projects. They check feasibility. They conduct entrepreneurial training to create new business owner. They help MSME with marketing, raw material, even participation in the government tender. Right? SIDC also make life easier for a small industry by giving advance payment against order. Yes, they give advance payment against the order. Right? They discount bill of government departments. So supplier quickly get up to 80% of their payment. By discounting, supplier can easily get 80% of their payment. Now the question is, what is the source of their fund? Where does the money come from? So they raise fund from state government, IDBI, bank, bond, debenture, apart from their own share capital and reserves. In short, they are not just lender, they act like a partner in the state level industrial growth. So let's quickly summarize. SIDC is a state run body for industrial growth. They build infrastructure like park and estate. They provide finance like loan, guarantee, equity. They support MSME with training, marketing, raw material, tender. They help in working capital payment. Their fund come from government, bank, IDBI bonds. So that's all about SIDC in nutshell. A perfect blend of finance plus infrastructure plus support to promote industries in every state. Now let's talk about the SIDC structure and challenge. Let's talk about it. So what we have just discussed, SIDC provide financial help. They help industry, estate, park and cluster. They also take up joint venture with private player to promote big project. They help industries in export marketing, guiding them to take part in international fair. How many SIDC are there? Today, many SIDC across India, we have 28 SIDC run by the state government. Out of these, 11 of them work as state financial corporation. So they handle both promotion and financing role. Right? So 11 of these 28 work like a state finance corporation. So they handle both financial operation also and promotion aspect also. But there are some challenges also. So what kind of challenges are there? Many SIDC face a staff shortage and lack the I think this is the repetition. They face a staff shortage, lack of experienced professional, right? So it reduce their effectiveness. So what I told you, SIDC are a state level body to promote industry. They provide finance, infrastructure, and from export support. They run training center to create skilled worker. They encourage women entrepreneurship. Total 28 SIDC are there. 11 also act like a financial corporation. They face staff shortage, default, and inefficiency. Right? Now friends, let's look at the organization and management of the SFCs or state finance companies. So basically how they are managed. We are talking about state finance corporation, an important support system for a small industry. Each SFC is run by a board of 10 directors. How many directors are there? Board of 10 directors. They run each SFC. Now the managing director is appointed by the state government sometime after consulting RBI. Right? So what I'm talking about, that managing director, or you call it MD. Who appoint MD? MD is appointed by the state government. Right? After consulting whom? After consulting RBI, MD is appointed by the state government. Out of the 10 directors, 3 are nominated by the state government, 3 are elected by the financial institution like bank, insurance company or cooperative. Right? So what I'm talking about, SFC. SFC run by board of 10 directors. How many directors are there? 10 directors they are there. Who appoint the managing director? State government appoint the managing director. Out of the 10 directors, 3 are nominated by the state government, 3 are elected by the financial institution like bank, insurance company and cooperative. Right? Overall, the state government and the semi-government body will hold the majority control. Clear it is? Now, what do they actually do? See, SFC provide loan to buy fixed asset like land, building, plant, machinery. They mainly support a small industry with capital up to 3 crore. They also help industry raise money by underwriting share, by underwriting debenture and securities. You know what is the meaning of underwriting? So this SFC guarantee that if nobody buy your bond, I will buy. That is called underwriting. Plus, they also guarantee loan taken by industries from bank and repayment can go up to 20 years. So in short, SFC act like a financial backbone for a small industry, funding them, supporting them, even helping them raise money from the market. So let's quickly recap the key points. So what I told you, that it is managed by 10 member body, majority control by state. It provide loan for land, building and machinery. It support industries with capital up to 3 crore. Underwrite securities and guarantees industrial loan. So friends, if you look at the structure of the SFC, so each SFC has a board of director, right? So board of director are there. How many members are there? 10 members are there. in each SFC, and the managing director is appointed by the state. Managing director is appointed by the state government, usually after discussing with RBI, and director come from different sides, right? From where director comes? So director come from, some are nominated by the state government, okay, some are elected by the bank, insurance firm, cooperative bank, investment trust. So the control mainly lie with the government and the financial institutions. Now if you look at the source of funding, so their capital is fixed by the state government between 50 lakh and 5 crore. Capital is shared by the state government, RBI, bank, insurance company, cooperative, and even private investor. A state government guarantee this share, giving financial security. SFC can also raise more money through bonds and debenture, but within the limits. So if we see the function of SFC, so what they do, they provide loan to industries for land, building, and machinery. First point. So they help. Okay, so we are talking about the function of SFC. So second point, they help a small industry with capital up to 3 crore. They can underwrite share. I think we have discussed it. What are the challenges of SFC? Yes, too much dependence on government rule, which sometimes slow the decision. Political interference and corruption reduce efficiency. They also need to follow the WTO World Bank condition, which can sometimes hurt a small scale industry. So let's quickly summarize the key point. Created under the 1951 Act for financing state level industry. Board of Directors is a mix of government and financial institutions. Capital is 50 lakh to 5 crore and government guaranteed capital. Function I told you, loan, underwriting, guarantee for a small industry, and challenges I told you, government interference, corruption, external restriction. These are the challenges. Now let's look at the key highlight of the SFC. So I told you, state finance corporation are a very important part of the India's financial system. Their main job is to support small and medium industry in different states. They not only help industry grows, but also ensure that development is spread evenly across region, so that progress is not limited to just a few big cities. By funding these institutions, by funding this industry, SFC create more investment opportunities, job, wider industrial ownership at the local level. Currently, there are 18 SFC in India. Out of these, 17 are formed under the State Finance Corporation Act 1951. Tamil Nadu is an exception, where the Tamil Nadu Industrial Development Corporation or TIIC work just like an SFC, but is registered under the Companies Act 1949. So 17 are formed under the State Finance Corporation Act 1951. TIIC is just an exception, right? So to quickly summarize, SFC is the backbone of a small and medium industry in a state. They promote regional balance, investment and job. 18 SFC exist, with Tamil Nadu following a separate model. Now let's talk about organization and management of SFC. So how SFC are managed. The management of SFC are handled by the board of director. The board usually has 10 members. Out of this board, the managing director is appointed by the state government, often after consulting the RBI. State government directly nominate 3 directors. Another 3 directors are elected by the financial institutions. So 3 directors by state government, 3 directors by financial institution like insurance company, scheduled bank, investment trust, cooperative bank, right? And the remaining members are mostly appointed by the state government and related body. So overall, the state government and the quasi-government institution plays the major role in running the SFC. So to quickly summarize, board has 10 directors, managing director appointed by the state government with RBI consultation, 3 nominated by state government, 3 elected by financial institution, and state government hold the majority control. Now let's look at the function of the state finance corporation. So their main job is to provide financial help to a small and medium industry. They give loan for fixed asset. They provide support to a small industrial unit, earlier up to 3 crore, but as per government guideline, they can go up to 30 crore, right? They can underwrite securities, which means they help new company by buying or guaranteeing their share, debenture and other instrument. So they can guarantee the new company their share, debenture, that's if nobody will buy, I will buy. That is called underwriting. Now, finally, they also give loan guarantee. So, if a business take money from a bank, the SFC can stand as a guarantor. The repayment period for such a loan can go up to 20 years, giving industry enough breathing space. So, let's quickly summarize. Loan for land, building, machinery, support to a small industry, underwriting of share and debenture, loan guarantee with up to 20-year repayment. Now friends, let's look at the working structure of SFC. So I told you, I think this is repeated part. Okay, just let me revise. They were created under the State Finance Corporation Act 1951. The capital is fixed by the state government. Capital is divided into share, which is held by the state government, RBI, bank. I think this portion we have already discussed. Yes. Now let's look at the SIIC, Startup Incubation and Innovation Center. So it was at IIT Kanpur. right? It was set up in the year 2000, when a startup culture in India was just beginning, right? Think of it like a support system for young entrepreneur, providing mentorship, guidance, resources to grow their ideas. It connects a startup with expert, professor, industry mentor who guide them step by step. SIIC, or we call it Startup Innovation Incubation and Innovation Center, this was built in collaboration with SIDBI, right, to promote entrepreneurship inside IIT Kanpur. The focus is not just on profit making, but also on solving real problems of India, especially for marginalized community. The focus on solving the problems from idea to final product. SIIC provide the space, environment, resources that help innovator turn dreams into reality. In short, SIIC is one of the India's earliest startup incubator. It offers mentorship, it connect entrepreneur with expert, it provide resources and focus on innovation that create real impact. Now we have SSIDC. What is this SSIDC? So they were set up under the Companies Act 1956 by the state government to support a small, tiny and village industry. Who set up this? Companies Act, under Companies Act 1956 set up by the state government. The state government set up this SSIDC, or we call it a small industry development corporation. Unlike regular government department, they enjoy more flexibility to run different activities that help the small business. One key role is to procure and supply a scarce raw material that a small industry often struggle to get. They also provide machinery on easy hire purchase term so that entrepreneurs don't face a big upfront cost. To help in business growth, SSIDC give marketing support, ensuring a small industry can actually reach customer. They haven't developed industrial estate and shed so that entrepreneur can get ready infrastructure operation. And on the top of that, they provide seed capital, managerial help on behalf of the state government to boost new venture. Now let's look at the SIDBI. You know about SIDBI, let's talk about it. So basically, if we talk about the SIDBI, Small Industrial Development Bank of India, so it was established on 2nd April 1990 to help the MSME grow. It operates under the Ministry of Finance, Government of India, headquartered located in Lucknow with a pan-India presence, provide refinance facility to bank and financial institution. It offers term loan, working capital finance to industrial unit. It serves as the principal finance institution for the MSME sector. It is regulated by the RBI and as one of the four Indian All India financial institution alongside Exim Bank, NABARD and NHB. So Exim Bank, NABARD, NHB and this SIDBI. These are the four, All India financial institution. They play a vital role in credit extension and refinancing within the financial market. Right. So what are the main goal of it? Let's have a look. So its main goal is to finance, support, promote a small and medium enterprise across India. SIDBI also work with other institutions to make sure that MSME get the right help and right guidance. So what SIDBI aimed for? So I told you that they make it easier for a small business to get loan, to get credit, to bridge gap in finance and support to help the business grow. SIDBI want to be the go-to institution for MSME financial and development need. And it focus on building a strong, competitive, globally recognized MSME sector. In short, SIDBI is a friend and guide for small businesses, provide finance, support and growth opportunities. Now let's look at the SIDBI jurisdiction and the core function. I think we have discussed it. I told you it operates under the Ministry of Finance, right, and its headquarters in Lucknow. We have discussed it already. And it is the main financial institution for MSME sector. It provides refinance facility to bank and financial institution. It offers term loan and working capital finance directly into industrial unit. It is regulated by RBI. SIDBI is one of the four AIFI. What are the other three? Exim Bank, NABARD and NHB. It plays a key role in extending credit and refinancing in the finance market. And it emphasizes long-term financing to help industry expand and grow. What is the SIDBI role in MSME and microfinance development? So SIDBI support microfinance institution, or we call it MFI, through its SIDBI Foundation for Microcredit program. So there is a program called SIDBI Foundation for Microcredit, through which it supports the microfinance institution, helping undeserved communities across small loans, access the small loans. It focuses on rural development by encouraging entrepreneurship and supporting the small businesses in their villages. It run as per the intellectual finance program. It run the institutional finance program which ensure a smooth flow of fund to the micro and small industry So you can see clearly written here, directly extend loan to MSME. Then it provides term loan refinancing to banks, small finance bank and NBFC, strengthening the lending network, directly giving loan to MSME, in addition to the refinancing support. Established in the year 1990 by an Act of Parliament, SIDBI is the main institution promoting financing and developing MSME in India. Right. Now let's look at the MSME loan scheme by the commercial bank. So let's understand MSME loan scheme in simple term. Why MSME matter? Because MSME are the backbone of our economy, creating job and driving growth. But they often need financial help to start and expand. So basically, banking role is that commercial bank and financial institution offer different types of loan tailored to the unique need of the MSME. Then post-COVID recovery after the pandemic, special credit program were launched to help the MSME revive. Right. Now let's talk about the Pradhan Mantri Mudra Yojana (PMMY). So it was started on 8th April 2015. It gives loan up to 10 lakh to micro and small business that are non-corporate and non-farm. So Mudra rule is that Mudra full form is Micro Unit Development and Refinance Agency. Micro Unit Development and Refinance Agency. It provides refinance support to bank, MFI and NBFC, right? So that they can lend to microwave. Now friends, if you were to apply, so loans are available via commercial bank, small finance bank, MFI, NBFC and online through Udyami Mitra portal. So if you look at the lead category or loan category, Sisu up to 50,000 for a startup or early stage business. Kishore from 50,001 to so 15,000, as you can see, Sisu up to 50,000, Kishore from 50,000 to 5 lakh, Tarun from 5 lakh to 10 lakh. So Sisu for a startup, Kishore to expand your business, and Tarun for well-established enterprise. No collateral is required. Loan or collateral free with no processing fee. And inclusive coverage. Also support allied activity like pisciculture, beekeeping, poultry, food processing, and entrepreneurship support. Entrepreneurship focus. It encourages first-time entrepreneur and sustainable livelihood through government mission and initiative. In short, PMMY, I can say that they are designed to empower small businesses with easy collateral-free financing. Now let's talk about the 3-stage loan category under PMMY. I think we have discussed it. Sisu up to 50,000 for a startup and early stage business. Kishore from 50,000 to 5 lakh for growing businesses, and Tarun from 5 lakh to 10 lakh for well-established micro unit. So PMMY offer a step-by-step financial pathway. PMEGP. Let's talk about the PMEGP, which is Prime Minister Employment Generation Program. It is a merger of PMRY and REGP, creating self-employment opportunity for youth and artisan. It focuses on micro enterprise in the non-farm sector, implemented nationwide by KVIC. What is the objective of it? To generate sustainable employment in the rural and urban area, to promote self-employment for traditional artisan and unemployed youth locally. Right. So we are talking about PMEGP, generate sustainable employment, self-employment, credit-linked subsidy, and the financial help. So these are the objective of the PMEGP: credit-linked subsidy and financial help to the new venture, especially in the rural area. In short, PMMY and PMEGP together empower entrepreneur and artisan, making it easier to start. Now, friends, how PMEGP work at the state level? Let's look. It is implemented through KVIC Directorate, DICs, which is called District Industry Center, and KVIB. Bank disburse fund directly to the beneficiary. Government subsidies are credited straight into beneficiary bank account via designated bank. Who can apply for this PMEGP? So I told you, age requirement is minimum 18 years. Education requirement is at least as standard. For manufacturing project costing over 10 lakh, and for business service project costing over 5 lakh. 8th class study is essential minimum. And then if you look at the eligible participants, I told you. So age requirement I have told you. Then education requirement I told you, 8th class pass. Eligible applicant includes individual and self-help group, society registered under Society Registration Act 1860, and production-based cooperative society and charitable trust. Who cannot apply? So existing units supported under PMRY, REGP or any other government scheme, units that have already received government subsidies under any scheme, they are not eligible to apply for PMEGP. What kind of financial assistance is given under PMEGP? So project cost, manufacturing sector up to 25 lakh and business sector up to 10 lakh. I think there is a revision of 50 lakh. Let's have a look. Now if you look at the subsidy rate, so general category, urban rate is 15% subsidy, rural area is 25% subsidy, and special category it is 25% and 35% subsidy. So 15, 25 under general category, and special category like SC, ST, women. So in that case, 25 and 20. Now let's look at the CGT MSE, which is called Credit Guarantee Trust Fund for Micro and Small Enterprise. So it is a joint initiative by the Ministry of MSME and the SIDBI. Its purpose is to promote collateral-free loan for micro and small enterprise. Fund corpus is contributed by the Government of India and SIDBI, and benefit is that MSME can access loan without needing full third-party support. Right. So that is about CGT MSE. So what I told you, contributed by the Government of India and SIDBI. Benefit is that MSME can access loan without needing third-party guarantee. That is one benefit of CGT MSE. So CGT MSE make lending easier and safer for both entrepreneur and the banks. Now let's look at this CGT MSE guarantee is super important. Micro 5 lakh 85%, 5 to 50 lakh 75%, MSE Northeast region up to 50 lakh 80%, 50 to 500 lakh 75%, right? Then women SC, ST, PWD and Agniveer led MSME any loan amount 85% coverage. MSE in aspirational district, so any loan amount 75% coverage. So extra 5% coverage for MSME is identified credit deficient district, is called CDD, ICCD, which means identified credit deficient district, right? From December 15, 2023, coverage limit increase 75% to 80%, 87% to 80 to 85%, and 85 to 90%, effective December 2023. What is the eligibility for CGT MSE scheme? So apply to both new and existing enterprise, applications submitted through bank, financial institution or RRB, right? So CGT MSE gives MSME high guarantee coverage, especially for women, SC, ST, PWD, entrepreneur and MSE in the backward region. Now let's look at the assistance and guarantee cover. So CGT MSE guarantee assistance. So guarantee cover ranges from 50% to 85% of the loan amount. Micro enterprise with loan up to 5 lakh get 85% coverage. In case of default, lender can claim up to 75% of the defaulted amount for loan up to 200 lakh. How much lender can default? So lender can claim up to 75% of the defaulted amount. The purpose is to reduce the lender risk and make credit easier for MSME. Now let's look at the CLCSS, which is called Credit Linked Capital Subsidy Scheme. It helps MSME upgrade technology by providing a 15% capital subsidy. So main point is upgrade technology, the technology upgradation. 15% capital subsidy is provided. This question was asked. Maximum subsidy 15 lakh, 15 lakh for loan up to 1 crore. So if loan up to 1 crore, maximum subsidy 15 lakh, because the MSME want to upgrade technology, and the machines. Then maximum subsidy 15 lakh for loan up to 1 crore. Who are eligible? So only for adoption of the modern or near state of the art technology. Replacement of old machinery or the use of second hand equipment is not eligible. So only when you buy new machinery, replacement of the old machinery is not eligible under this scheme, right? How to apply? Through 12 designated branch and agency including SIDBI, NABARD, SBI, PNB, right? So through these 12 designated branch and bank agency you can apply. Now there is something called CLCSS, right, which is called Credit Linked Capital Subsidy Scheme. So who can apply? Open to all MSME that meets scheme criteria. Purpose is to help MSME modernize and enhance productivity. Then we talk about the eligibility rule. So not for unit updated with same technology, right? Second hand machinery is not allowed. Then we have the equity infusion through fund of fund. So which means it addresses equity shortage for MSME, and it is essentially at the growth stop. So purpose I told you about CLCSS, help MSME modernize and enhance productivity. What about equity infusion for MSME through fund of fund? Yes, fund of fund. So objective is to address equity shortage for MSME, especially at the growth stage. Purpose is to support expansion, prepare MSME for a stock market rise listing. What are the key features? It provides equity funding to visible high growth MSME, channels fund to undeserved enterprise, and government participation improve access to crucial growth capital. Now, what are the eligibility and application? So, first of all, equity infusion versus via fund of fund. Who can apply? It is open to all MSME, right? How to apply? Through investor portal, investor fund you can apply, and then purpose is very simple, to boost financial security. Now, friends, let's look at the CGSSD, which is called Credit Guarantee Scheme for Subordinate Debt. It supports stressed or NPA MSME by providing subordinate debt. Purpose is to enable promoter equity infusion, improve liquidity, strengthen DER, debt equity ratio. Key features include, for MSME classified as NPA account as of April 30, 2020, its promoters can borrow up to 15% of their stake or 75 lakh, whichever is lower. Right? If 75%, 50% of the stake is lower, take that. And for 75 lakh, whichever is lower, it helps revive the operation and sustain business. Now we have CGSSD, I told you. So what are the key features of CGSSD? For MSME classified as NPA or stressed, promoter can borrow up to 15% of their stake or 75 lakh, whichever is lower. It helps revive operation and sustain the business. Now friends, some more point about CGSSD, let's talk about. So what I told you, that CGSSD purpose is to help the distressed MSME regain financial health and stability. Guarantee coverage is 90% of the debt is covered. Promoter contribute the remaining 10%. Fine. I told you 90% of the debt is covered by the and then 10% promoter contribute. Repayment term is maximum 10 year, which is with a principal moratorium up to 7 year. Impact is that it provide critical support to revive operation and strengthen the finance. Then we have SMILE, which is called SIDBI, Make in India Loan for Enterprise. So it support the Make in India mission by providing financial and MSME. The type of assistance can be offer soft loan and term loan with flexible representing term. Then passenger help purpose is to help MSME meet debt equity requirement for new uses. So eligibility I told you for SMILE, new MSMEs in the manufacturing and service sector, existing MSME looking to expand, they are eligible. Focus on a smaller MSME needing the support. Now if you look at the nature of assistance under SMILE scheme, so that it is maximum loan is 10 lakh for equipment, 25 lakh for other business need. Repayment term is up to 10 year with a moratorium of 36 months, which means 12 year, 3 year, right? And basically purpose is to help MSME grow, expand and grab new business decision, right? So then we have the MSME business loan for a startup in 59 minutes. So it is designed to provide fast online. Dispersal should happen within 7 to 8 working day after approval. And eligibility, existing MSME or startup with IT compliance, right? They are eligible. Now let's look at the future of MSME business loan for a startup in 59 minutes. So for fast and fully online, loan processing is completed within 59 minutes. It offers working capital loan, term loan, mudra loan. It is fully automated and and digitalized. Then if you look at the flexible, basically flexible eligibility available for both GST registered and non-GST business. Non-GST business or those without ITR or bank statement can self declare necessary detail. Eligibility is assessed based on income, revenue, repayment ability, right? Existing credit and all other terms, right? The portal is linked with CGTMSE. So we are talking about CGSSD, right? Full form you must remember. Okay, MSME business loan for a startup. So this MSME business loan for a startup portal is linked with CGTMSE for seamless verification of the borrower eligibility. Now, what are the nature of assistance under MSME loan? So what are the nature of assistance? Loan range from 1 lakh to 5 crore with in principal approval. It can be collateralized or collateral free. And interest rate is start at 8.5% for what? And rapid approval with flexible terms make it a deal for MSME and startup. What about the loan scheme? So MSME loan scheme by bank, working capital loan for daily business operation, term loan for expansion, a specialized loan product tailored to different business need, right? Then we have eligibility and interest rate vary across bank. Now, bank and financial institution offering MSME loan. Most banks like SBI, SDFC, ICICI, Axis Bank provide MSME loan product. Other lenders include NBFC, SFB, RRB, and microfinance institution. This wide range ensures business can choose loan that fit their working capital need or long-term investment. What are the key government schemes supporting MSME? PMMY, Pradhan Mantri Mudra Yojana, which is a loan for small businesses growth and expansion. PMEGP, Pradhan Mantri Employment Generation Program, create self-employment opportunity via credit support. CGTMAC, Credit Guarantee Fund Trust for Micro and Small Enterprise, enable collateral-free loan by providing credit guarantee. Right. So this thing we have talked about. What are the loan options we have talked about? So let's look at the loan option. Yes, one more point I want to tell you that government scheme provide loan and subsidies to support MSME growth. Program like CLCSS, which is credit link. Let's quickly understand the source of finance for MSME. MSME need fund for two main reasons, for day-to-day operation and long-term growth. So what are the funding option? So first is called self-investment. So where entrepreneur use their own saving. Second is the family and friend, often called love money. Third is we have the venture capitalist, so who invest in high growth business. Fourth they have is angel investor. Who is angel investor? So wealthy individual who support startup in the early stage. Then we have the crowdfunding. Crowdfunding means large number of people contribute a small amount online. Then we have business incubators, so which not only provide finance but also mentorship and resources. Now finance can be classified in three ways: by duration, by ownership, and by origin. If we see by duration, it is either short term, it is a versus long term funding needs. If we go through ownership, equity or debt. Equity means ownership based and debt means loan based, right? Then we have by origin. If you go by origin, we have internal source. It may be profit, it may be reserves, or external, it may be loan, or it may be investor. So to summarize, MSME can raise fund from personal saving, network, investor, crowdfunding, incubator, and these sources are broadly classified by duration, ownership, and origin. Now let's look at the top source of finance for MSME. So what are the top source of finance for MSME? The first source is called personal investment. Here the entrepreneur uses their own saving or uses their own asset. This shows trust and commitment toward the business and is often used for things like expansion, buying machinery, or covering the daily operation. That is called personal investment. Second thing is the love money. This comes from friend or family, sometimes called patent capital, since repayment can wait until profit comes in. But one must be cautious because mixing money with personal relationship can create problem later. In short, personal fund show commitment, while love money offer quick support but need careful handling, right? Some other top source of finance, as you can see, we have just discussed angel investor, right? So venture capital is one which is aimed at fast growing sector like IT, biotech, communication. It is suitable for business with high risk. It requires giving investor a share of ownership, right? Obviously whoever have invested, you have to give them a share of ownership, and investor generally expect a significant return. And this venture capitalist is best when investors bring domain expertise to guide the venture. Hybrid capital. So it is a mix of equity and debt with a feature of both, usually subordinated and comes with comparatively higher return. It allows suspension of interest or dividend under certain condition. Then we have the top source of finance, angel investor. Yes. So these are wealthy individual or retired professional who not only invest money but also bring guidance, expertise, and valuable connections. Many times they even provide managerial and technical support to help the business grow. Crowdfunding. Crowdfunding, funds are raised online from large number of people. So instead of getting big money from a few investors, MSME receive a small contribution from many, which spread the risk and make it easier to start. Then we have the business incubators. These are the institutions designed to nurture a startup, especially in technology driven area. They provide shared space, they provide resources, they provide services to reduce the cost, and usually support a business for 1 to 2 years before it is ready for full scale production. Then we have the grant and subsidies. This is free financial aid from the government or institutions, and the best part is no repayment is required. in this case, but it must come with a strict condition that the fund must be used exactly for the stated purpose, otherwise repayment may be demanded. Then we have the loan. So the most common option available from bank, NBFCs, government schemes. Loan come in different types: term loan, working capital loan, informal borrowing. The key is to compare lender carefully and choose the best fit for your business. In short, we can say angel investor bring both money and expertise. Crowdfunding gather a small amount from many people. Incubators nurture startups, and grant provide free aid, and loan remain the most widely used source of finance. Now let's talk about the CRR, which is called credit risk rating. So friends, CRR is done before a loan is approved. Every bank uses its own model, customized for different borrowing type. Basically, it measures the chance of default, right, or weakening in the borrowing credit quality. And to stay accurate, these credit ratings are reviewed every year. Also, banks set minimum threshold like CRR manual or RAM, which borrower must meet to qualify. Now the question is, why is CRR so important? Because it is industry standard, right? Which means it is used by almost all the banks. Many institutions also have their own in-house scoring technique, right? And CRR help not just in checking a single borrower reliability, but also in evaluating the overall health of the loan portfolio. Right. So finally, the key factor in rating. What are the key factor in rating? The first is called financial strength, which means balance sheet, income, liquidity. This is called financial strength. Second is the future outlook, which means projections and key ratios for repayment capacity. Third is called operational aspect, which means management quality, industry condition, cash flow. So in short, we can say CRR is a bank specific rating system done before sanctioning loan, and it is reviewed regularly. It set minimum standard. It consider financial outlook, operation to measure the risk. Friends, if you are looking for quick revision session for the entire subjects of MSME, you can enroll in our MSME course. In the description section, you will get the link of the course. In addition to the capsule content, you will get unit wise theory, unit wise MCQs. Almost each unit have almost 50 to 60 MCQs, catering to about 2000 MCQs entire syllabus. And also you will get previous year question. Many aspirants have cracked the examination using our material. You can also crack easily, right? So friends, you can check the link in the description section, or you can WhatsApp me on the number 8292857381. I again repeat, 8292857381. So friends, now let's come back to our discussion. So what are the key factors in rating? I told you financial strength like balance sheet, income, liquidity, future outlook like projection and key ratios, and operational aspect. Now, how to enhance the credit rating mechanism? How bank enhance the credit rating mechanism? First, bank give more weight to the recent financial data so that rating reflect the latest health of the borrower. Second thing, they design separate rating scale for different borrower category, that is called customized scale, right, making the process more accurate. Third, rating models are regularly updated to match the changing market condition. And finally, such timely adjustment help in early risk detection so that default can be prevented in advance. So 4 point I told you, let me again remind you. First is giving more weight to the recent financial data. Second is designing separate rating scale. Third is regularly updating the rating model. Fourth is early risk detection. Now moving to the credit scoring and credit information report, or in short we call it CIR. So the objective here is very simple: to use a statistical model to judge repayment capacity and the chance of the default. So these are widely used by credit bureau and the lender, both for individual as well as the business. What are the major evaluation parameters? First is the repayment history, means how consistently dues are paid. Second is the credit utilization, which means how much of the available credit limit is used. Third is the length of the credit history, which means the age of the credit account. Credit mix, means the variety of the account like loan, card, mortgages, recent inquiries, number of fresh credit applications. Credit scores usually range between 300 to 850, and the higher the score, the stronger the credit worthiness. In short, we can say that basically credit rating are improved with recent data, right, customized model and timely update, right, and basically is through scores and reports. Now, if we talk about the importance of credit risk scoring model, let's have a look. So first, they are objective assessment, means all the so we are talking about the importance of credit risk scoring model. So they provide you objective assessment, means all borrowers are judged on uniform standard. Second thing is that they help lender make better lending decision by showing the risk level and guiding suitable loan terms or interest rate. Third point is, these models reduce subjectivity, which means so personal bias or inconsistent judgment are minimized. And lastly, they ensure fairness and transparency. Now friends, now coming to the role of credit information report or CIR. CIR provide vital detail on the borrower past credit history, which help in credit appraisal. Yes, it provide you vital detail on borrower past credit history. Second thing, they allow early detection of risk by flagging habitual defaulter, multiple borrowing or high risk profile. Importantly, CIR are a mandatory pre-sanction step before loan are approved. But bank don't stop there. They also check regulatory defaulter, just like regulatory defaulter list like those from RBI or ECGC, to be extra cautious. So what we talked about CIR, first point I told you that they provide vital detail on borrower past history. Second, they also allow early detection of risk by flagging habitual defaulter. They are a mandatory pre-sanction step before the loan are approved, right? So that is the point. Now, in short, we can say credit risk scoring bring objectivity, fairness to the lending decision, while CIR or credit information report, they act as an essential tool for risk detection and loan approval. Now, credit sanctioning and exception. Let's talk about it. So friends, let's look at the credit sanctioning and exception. Credit score from CIR, they plays a vital role in consumer loan approval. So what is so good about credit sanctioning and exception? Let's have a look. So first of all, credit score from CIR plays a vital role in consumer loan approval. However, bank may allow exception in approval, but only as per their initial guideline. So the credit information company or CIC, bank rely on these agencies to generate credit information report for both individual and businesses. At the same time, bank also share borrower data with these agencies. In India, we have 4 major CIC: TransUnion Civil, Experian India, Equifax India, CRIF High Marks, right? So these agencies build credit history and make lending decision more accurate and reliable. Now let's talk about the credit information categorization. So there is something called consumer account, which refers to the borrowing by individual. There is something called commercial account, which refers to the borrowing by business or non-individual entities. Finally, the types of consumer credit report. There is something called basic report, which gives detail about the loan, advances and asset classification. There is something called enhanced report. What is enhanced report? This include all those detail plus a credit bureau score. So basic report only include detail about loan, advance and asset classification, while enhanced report include all those detail plus a credit bureau score. In short, we can say credit score influence loan approval. CICs like Civil and Experian build credit history. Account are classified as consumer or commercial, and report can be basic or enhanced with a score. Now friends, let's look at the credit bureau score system. So friends, the score ranges from, we are talking in the context of credit bureau score system, the score ranges from 300 to 900. A score near 300 means very high risk, while a score near 900 means very low risk. Currently, this system is used only for individual or consumer borrower. So friends, a score near 300 means very high risk, while a score near 900 means very low risk. Currently, this system is used only for individual and or consumer borrower. Now, how is the credit information report, or we call it CIR, used? See, two kinds of clients are there. I told you, for existing client, it is checked at the time of renewal, proposal review or credit limit enhancement. And for new applicant, it is mandatory review. It is mandatory. CIR is mandatory whenever a fresh loan proposal is submitted. So suppose there is an existing client, it is checked at the time of renewal, proposal review or credit limit enhancement. And for new applicant, it is mandatory. CIR is mandatory. Now let's see the risk grade based on the credit score. Something called CS1, which shows the strongest repayment capability, while CS4, it reflects the weakest repayment safety. Bank use a score ranges provided by CIC to assign this grade. Right, I told you that score range provided by the credit information company, that is used by bank to assign these kinds of grade 1 to 4. Sometimes bank even obtain multiple CIR from different credit agency, especially for higher loan exposure. And here is an important rule that if two CIR are used, try to understand, if two CIR are used, the worst grade is taken for sanctioning. For example, suppose CIBIL score 745, CS is credit score is 2, which indicate normal risk. CRIF score is 695, risk grade is 3, CS3, which means a moderate risk. So in this case, the bank will apply CS3, which is the riskier grade. Also, if an account was written off or it was settled in the last 3 years, the case must be escalated to a higher authority. That is the point. Now one more point, for overdue account, the final approval depends on the assigned risk grade and the sanctioning power. So in short, we can say credit bureau score run from 300 to 900, CIR are used for both old and new client, grade range from CS1 to CS4, and when multiple reports are checked, the worst grade always apply. I hope this makes sense to you. CS1, remember CS1 always represent the strongest repayment capacity and CS4 represent the weakest repayment capacity. Now friends, let's talk about the credit score and credit versus credit rating. Right, CIR we have talked about, commercial segment we have talked about, right? Yes. So what I told you, that there is a mandatory step, there is something called careful review decision process when CIR is not available. So credit appraisal can proceed, but the absence of CIR should be recorded in the loan paper properly. There is something called limited credit history. CIC may issue a 2-digit code 1 to 5 instead of the -1 to 5, right? Instead of the standard 3-digit score. Such code are not valid for delegation of authority. Loan should be processed under normal sanctioning rule. If we compare credit score and credit rating, you can see credit score is a 3-digit number that shows how responsibly an individual has borrowed and repaid loan in the past. You can think of it as your personal financial report card. That is called credit score. It is a 3-digit number. What about credit rating? Credit rating is different. Instead of individual, it applied to company, it applied to the government, right? It is given in the form of letter like AAA, BB, and tells investor or lender how risky it is to give money to that entity. Now if we talk about the risk pricing, bank don't charge the same interest rate from everyone. If a borrower has weak credit history, they are treated as high risk, so that they have to pay a higher interest rate. So big bank also use a method called RAROC, or risk adjusted return on capital, which basically ensure that the interest charge cover the risk of possible loan loss, right? So what does RAROC ensure? RAROC ensure that, right, that the interest charge, it covers the risk of possible loan loss. And finally, let's talk about the portfolio management. This is how bank keep their overall loan book healthy. So bank keep track of how borrower move between different risk category, right? They set credit rating so that they don't lend too much to one borrower or to one sector. That is called portfolio management. And the bank basically the bank map rating across industry, right? So restrict exposure to vulnerable sector and run stress tests to identify the weakness. So just for a quick summary, I told you credit score for individual, credit rating for companies and government, risk pricing clearly indicate higher risk. Higher risk means higher interest, and portfolio management is a strategy to keep the loan book safe and balanced. Now let's look at the key information for credit appraisal. So applicant details should be there, like name of the applicant, his age, his date of establishment. Constitution means type. Constitution type includes individual, proprietorship, partnership, private limited and other. Then we look at the location detail. That means whether it is residential address or business address. That is called location detail. Then we have the business experience. Means year of experience in proposed line of business, past performance or track record. Then we will have the net worth information, like net worth statement of the applicant, right? Supporting financial document attached. Then we have appraisal remark, like financial strength will observed, but what are the weakness, right? All documents submitted and verified. So this is the format, right? Now friends, let's look at the key aspect of the term loan appraisal. So basically, let's quickly understand the key aspect of term loan appraisal in banking. First is called financial indicator. So bank checks some ratios like debt equity ratio, DSCR, debt service coverage ratio, to measure leverage, right? So DER is used to measure the leverage and DSCR is used to ensure the repayment capacity. I think you know the formula, we have already covered it, right? So DER see the leverage and DSCR so the repayment capacity. Then cash flow and fund flow. For bigger loan, these statements are mandatory to assess whether the borrower can comfortably repay. Then we have the promoter contribution and margin, which means promoter must bring in minimum stake, while the margin is the portion of the project cost that borrower fund directly. Then we have the loan sanctioning, which means loans are approved only if financial norms are satisfied, with margin adjusted as per the policy. Then we have the security for the loan. Banks secure loan with the project asset, collateral property, and something personal guarantee. Then we have the interest rate. So rate depends on risk profile, tenure, security. Some concession like for women entrepreneur may apply. Then we have the disbursement condition. So finally, loan disbursement is done directly along with the margin contribution subject to a specific bank guideline. Now friends, let's talk about some key consideration for loan appraisal. I told you that loan appraisal factors like collateral free loans. So suppose a borrower offer no security, so loan must be covered under the guarantee scheme like CGTMSE or CGFMU to reduce the risk. Then we have the concept of repayment holiday, right? So what is the meaning of repayment holiday? So repayment holiday means basically it should reflect the project life cycle. What are the time needed for project completion, time needed to start commercial operation, right? Avoid rigid norms. What is the impact on the small and new unit? So poorly structured repayment schedule can strain first generation entrepreneur. So forcing repayment without ensuring working capital support often pushes small firm into stress. Now rational approach to repayment. Yes. So what is the rational approach to repayment? So bank must design repayment terms realistically. Proper coordination of loan disbursement with working capital need. It ensures financial stability of the borrower. Now let's talk about the DER. DER means debt equity ratio. It is the long term debt divided by the equity. So what are the components of DER? So it includes debt and equity. What are the things under debt like debenture, like bank loan, institutional borrowing? What are the things under equity like share capital plus retained earning? These are under equity. So debt includes long-term liability like debenture, bank loan, institutional borrowing, and equity includes honor contribution through share and retained earning. Now if we compare, basically what are things excluded? Like current liability is excluded. Remember, current liability is excluded from DER. Short-term debts not included. Right. Then we have interest versus dividend. So interest means compulsory, payable even without profit. It must be paid regardless of the profit. So it has a priority. What about dividend? It is payable only if profit plus shareholder approval. So let's look at the significance. So current liability has already been included in the DER. I told you, right? Focus remain on long-term solvency. So what we have just covered that DER shows long-term financial stability and leverage. High DER means more dependency on the borrowed fund. Low DER means major reliance on the owners fund. So DER is only for long-term liability, not current liability. Remember, this is the very important aspect. Okay. Now let's look at the equity and debt equity ratio. So I told you, if we compare, equity means equity financing and debt financing. For equity capital, what is the cost of capital? Dividend is the cost of capital. And about risk of business, equity financing, the financial risk is lower, right? Lower financial risk for equity financing, and leverage effect is limited in the case of equity financing. Ownership dilution is there, right? Because equity issue dilute ownership. Obviously, equity issue dilute ownership. What about the investor and lender perspective? So long-term commitment is there, higher risk is there in the case of equity financing, and obviously they expect the higher return, right? So equity financing is best suited for firm needing long-term capital without repayment pressure. Now let's switch our focus to the DSCR. DSCR is called debt service coverage ratio. So it shows the ability of a firm to generate cash to cover interest plus payment obligation. Means it shows how much firm is capable of to generating cash, right, to cover the interest plus payment obligation. So what is the formula for DSCR? In the numerator we write net operating income. In the denominator we write total debt service, right? So that is the formula for DSCR. Like again I am showing you the formula. In the numerator we write the net operating income. In the denominator we write the total debt service, right? So ideal ratio is the 1.5:2. That is the ideal DSCR ratio, which indicate healthy repayment capacity. Now if DSCR is greater than 1, it means we have the adequate earning to repay the debt. If DSCR is less than 1, it means insufficient cash flow is there and default risk is higher. So higher DSCR means stable and low risk. Lower DSCR means repayment stress and higher default possibility. Right, remember it. Now we have something called gestation period and repayment holiday. So what is this gestation period? Let's understand. So it simply means the time gap between the starting a project and beginning actual production. So during this time what happened? No income is generated. For banker, this phase is very critical because the borrower cannot repay loan until the business start earning. Right. So gestation period is the interval between the time gap between the starting a project and beginning actual production. So to support this gestation period, bank give a repayment holiday, Yes, bank give a repayment holiday, which is a grace period during gestation, so that the borrower is not burdened with repayment. Sometimes this holiday is extended even after production begin to cover delays in sales, cash recovery, or debtor collection. Now, coming to the second part, that is called promoter contribution and margin. So, promoter contribution is the amount invested by the promoter from their own fund in the project. It shows commitment and form part of the project total financing. What is the margin? Margin, on the other hand, is the borrower's share in the financing a specific asset like machinery or property. For example, if you take a car loan of 10 lakh with 20% contribution, so that 2 lakh is both your margin and promoter contribution. And for construction loan, if you spend 8 lakh, 5 lakh on land and 3 lakh on the building, so then your margin is 3 lakh construction only, while promoter contribution is the full 8 lakh. You can see, if you take a construction loan, if you spend 8 lakh, 5 lakh on land and 3 lakh on building, then your margin is 3 lakh, which is the construction only, while promoter contribution is the full 8 lakh. So to summarize, gestation means time till production start. Repayment holiday means grace period during gestation. Promoter contribution means full personal investment, and margin is the share in financing a specific asset. Let's talk about the promoter contribution versus margin. So you know that promoter contribution is the promoter total investment in the project. Margin is the borrower's share in the financing each asset under the loan. What about working capital assessment? See, basically these are the finance to meet short-term operational need by funding the current asset. So basically finance to meet the short-term operational need by funding the current asset. Now what are the core component of it? Current asset, which means inventory, receivable and cash. Current liability like short-term obligation. Working capital gap, which is as current asset minus current liability. Net working capital means excess of asset over liability. And current ratio, which is a liquidity measure. What are the assessment method? Assessment method is MPBF. MPBF means maximum permissible bank finance method. What is the turnover method? So this is the standard for MSME. What is the cash budget system? This is used selectively, mostly for seasonal industry it is used. What is sales projection and loan eligibility? So sales projection and loan eligibility, they are based on the realistic sales estimate plus financial history. Borrower must provide current year's forecast, next year forecast, last 2 year audited statement. And for established unit, they rely on past performance and market demand. Now what is about sales projection and eligibility, loan eligibility? So they are based on realistic sale estimate plus financial history. Borrower must provide the current year forecast, next year projected sale, and last 2 year audited statement. So these things borrower must provide. And for established unit, they rely on past performance, prevailing market demand, and inflation adjustment. So usually it is 15% annual growth rate assumed normally. Right. Now friends, let's look at the adjustment of the projected sale. You know what it means? If the borrower's sale projections seem inflated, bank revise them downward. So it ensures realistic calculation of the PVF. What is PVF? Permissible bank finance. Now working capital assessment, two methods are there. The first is called turnover method, which is called PVF, derived from accepted sale. Second is called MPVF method, which is based on sale plus current asset plus current liability for PVF. And then we have flexibility. So borrower may propose or bank apply the most suitable method. So what are the key terms here? Current asset. Current asset means stock plus receivable plus other current asset. Current liability, which means creditor plus other liability plus bank borrowing. So what is the formula for NWC? It's quite simple. Current asset minus current liability. Right. Stock, receivable, other current asset. These are a part of the asset. Creditor, other liability, bank borrowing. These are the part of the current liability. You subtract both of them. This will give you net working capital. Or you can say alternate way, you can say long-term fund minus long-term use. What about working capital gap? So it is CA minus CLOBV, which is current liability other than bank borrowing. What is current ratio? Current asset upon current liability. It shows liquidity, it shows short-term solvency. So that is the point. Now friends, let's talk about the comparison of working capital assessment method. Right. So if you see the comparison of WCL method. So basically there are under MPBF, there are three methods: method 1, method 2, method 3. Under method 1, bank provide higher finance. Under method 2 of MPBF, right, it is also called MPBF method. It is a standard or reference method. And method 3 generally results in lower finance compared to the method 2. right? So basically, let's look at the key points on NWC and current ratio. So I told you that when current assets are more than current liability, NWC is positive and ratio is above 1. When current assets are less, then the NWC turns negative and this ratio goes below 1. And when both are equal, ratio is exactly 1 and NWC is 0. So if we take the current ratio in the turnover method, it is approximately 1.25, and in the MPVF method, current ratio is approximately 1.33. Finally, bank also have flexibility. They may increase or they may reduce the finance by about 10% if there is a valid justification. So what I told you, method 1 higher finance, method 2 standard, method 3 lower finance. Net working capital depends on the comparison of assets and liability. Ratio 1.25 under turnover and 1.33 under MPVF. Bank can adjust finance to less plus minus 10%. Now let's look at the disbursement precaution. You know that you should verify the sanction order and the terms. You should ensure execution of loan document, collect margin money and borrower contribution, confirm KYC, due diligence and legal clearance. Register charges with the ROC. Right, you should register charges with the ROC right before release, and insurance of asset wherever applicable should be done. What about the disbursement stage? So this is called pre-disbursement. Then we have the disbursement stage. So basically these are the pre-disbursement stage. Now during this disbursement, what happened? You should open account in CBS same day. CBS open in the CBS same day. Then post charges. What are the charges you should post? Term loan you should remit directly to the supplier with invoice proof. Working capital you should allow the drawing power as per the stock statement. And you should collect link letter for subsequent disbursement. Enter correct sector, subsector, BSR code in CBS, set repayment schedule, holiday or installment. Then we have the post disbursement monitoring like site inspection, verify and the use of fund and use of fund. Then photographic evidence and inspection report, mortgage creation and registration in SERSEI. These are the post disbursement things. Obtain encumbrance certificate from sub registrar, follow up for insurance renewal and repayment tracking. Monitor early warning signal to prevent slippage into NPA. Now there are additional precautions for borrower like charges on the asset, right? So obtain charges on the asset. Yes. So friends, there are some monitoring tools. Monitoring versus follow-up. What is the meaning of monitoring? See, monitoring means, pre-disbursement and usage check. Fund use, regular contact, site visit, stock submission, stock statement, balance sheet, progress report. These things comes under the monitoring. And what are the things under, follow-up? So follow-up means post-disbursement enforcement. So monitoring means pre-disbursement enforcement and follow-up means post-disbursement. Once you have disbursed, then you have to follow up. Like timely repayment, compliance, correct irregularities, recovery dues, etc. etc. So what are the follow-up process which is used? So have a look. So that there is something called systematic follow-up, which means that follow-up simply means keeping a regular check on the loan account. It ensures that the borrower follow all the loan terms and if needed, we can take timely corrective action. So main tools of follow-up includes site visit, reminders, repayment reminders, checking sanction letters. Now if we will talk about OD and ODC limit renewal. So renewal should start at least 2 months before the expiry. Borrower must submit a fresh application with the updated data, and if the borrower does not apply, bank must ensure full settlement of the dues. Now let's see how to monitor the OCC account. So you should review monthly stock statement and other borrower report. This help detect any irregularity early and to ensure a smooth account management. So to quickly recap, I told you follow-up is regular check plus tools like visit, reminder and report. OD ODC renewal start 2 months early. Monitoring means monthly statement plus continuous tracking. Now friends, let's talk about the priority sector lending. So I told you that priority sector lending, the purpose is to target sector with high social and economic impact like agriculture, MSME, weaker section, job intensive sector. It is identified by the RBI and Government of India as vital. Agriculture, MSME, export, credit, education, housing, social infrastructure, renewable energy. So these are the under categories under PSL. So now let's see how we define MSME. Right. So let's see the definition of MSME. MSME stands for micro, small and medium enterprise. These are units involved in the manufacturing, production, processes or service activity. They are governed by the MSMED Act 2006 and overseen by the Ministry of MSME. Right. So if you look at the classification, before May 2020, manufacturing was less than 25 lakh. So this was the classification criteria before 2020. But we are not concerned about that. We are concerned about after 2020. So what happened? Based on investment plus turnover. So micro investment less than 1 crore. Small investment less than 10 crore. Medium investment less than 50 basically 50 crore. Right. I think 20 crore is wrong. 50 crore. Right. 50 crore. Yes, this is the correct. And just multiply 5, you will get turnover. 1 multiplied by 5 is 5 crore. 10 multiplied by 5 50 crore. 50 multiplied by 5 is 250 crore. So 11050, just remember it. Right. So MSME role in the economy. So they are the backbone of the growth. They generate job, they generate manufacturing output. They contribute almost 45% of the manufacturing output and employ 110 million people, which is second only to agriculture. But what are the challenges? Only 15% of the MSME registered on Udyam portal. Only 15%. Sector remain fragmented, informal and heterogeneous. So what is the way forward to improve infrastructure, technology adoption and supply chain? Policy support can boost MSME growth and can accelerate economic development. So that is a quick and clear overview of the MSME in India. Now let's talk about the Mudra Bank. Yes. So friends, Mudra Bank was launched on 8 April 2015 by the Prime Minister Narendra Modi. So it provides low interest fund to MFI and NBFC, which they finance from which they finance MSME. Part of the Pradhan Mantri Mudra Yojana, which was a key scheme for a small entrepreneur. The target audience were entrepreneur outside the regular banking system, focus on small scale units and large mile borrower. According to NSSO 2013, 5.77 crore small units, only 4% has formal banking access. So there is something called responsible lending. It promotes credit expansion without causing over indebtedness. So if you look at the ownership and structure, so initially 100% subsidiary of SIDBI. Yes, initially Mudra Bank was the 100% subsidiary of SIDBI, that is a Small Industrial Development Bank of India. Capital base was authorized capital of 1000 crore and paid up capital of 750 crore, which was fully subscribed by SIDBI. So that is a quick overview of the Mudra Bank, its purpose, its target, its structure, right? Now let's look at the expanded role of this Mudra Bank. So Mudra Bank role was to support micro enterprise sector by refinancing bank, MFI and regional lender. It focused on manufacturing, trade and services at the grassroots level. If you look at the Pradhan Mantri Mudra Yojana loan category, Sisu, Kishore, Tarun. Sisu means loan up to 50,000. Kishore means loan up to 5 lakh. Tarun means loan up to 10 lakh. Right. Sisu is given for a startup and a small venture. Kishore is given for growing micro enterprise. Tarun is given for for established micro enterprise. Today Tarun Plus is also there, and last time there was a question based on Tarun Plus. So please go through them. Now if you look at the government allocation, so total additional fund is 1 trillion. Distribution is like this: Sisu 40%, Kishore 35%, and Tarun 25%. Who are the eligible beneficiary? So a small manufacturer, shopkeeper, fruit vegetable vendor, artisans, and other micro enterprise, they are the beneficiary. Right. So that is a crisp overview of the Mudra Bank and PMMY. Now friends, let's look at the Daheja committee. So that is called the Daheja committee, which was a key milestone in India's banking credit history. So what was the objective of this committee? It was formed under the VT Daheja to check if industries were inflating their credit need. Yes. So why was this committee set up? To check whether the bank if industries are inflating their credit need. The aim was to propose measure to make bank lending more effective and more realistic. So what was the key finding? That bank credit to industry grew faster than the industrial output. Working capital loan were often given without proper assessment. Short-term credit was diverted for fixed asset, misusing the fund. And bank allowed short-term fund to be used for long-term need. So recommendation was that that credit evaluation means always assess borrower overall financial position and cash flow forecast. Working capital classification. So there are two kinds of component: hardcore component and softcore component. Hardcore component means a minimum stock or raw material financed by term loan, and short-term component which means variable current asset financed by working capital loan, which are quite variable. They are financed by the current asset loan, right? So then there is avoid multiple financing. So prefer dealing with one bank or form a consortium for large exposure. Then if you look at the limitation and outcome of it. So post 1974, inflation increased credit demand. The Daheja committee did not fully implement it, right? So RBI then set up Tandon committee for a deeper review of the bank credit. So that is called Daheja committee in nutshell. All its finding, all its recommendation, and why it relates to the Tandon committee. Tandon committee comes into picture in the year 1974. Now there is something called core committee. So basically its objective was to review the cash credit system and reduce the gap between the sanction and the actual utilization. What were the key recommendations? So borrower with working capital limit larger than 50 lakh, they should submit quarterly statement. Up to rupees 10 lakh, they should bank to do periodic review. And do not split CC into demand loan plus CC. Panel interest rate 1% for now, Tandon Committee 1974 to 1975, its objective was to strengthen the end use supervision and move from security based to need based lending. Earlier there was security based lending, now there is a need based lending. So core principle is to link credit assessment to the actual business plan and requirement. Borrower funds should be used first, bank credit only as supplement, monitor credit uses closely to enforce the discipline, and set industry level norm for current asset, raw material, work in progress, finished goods, etc. So let's look at the Tandon Committee in detail. It says about forms of credit. So it says that bank were advised to lend through cash credit, bill purchase, working capital finance or term loan. The choice depends on the composition of the borrower current asset. Then data submission. So borrower has to provide regular financial and operational statement. So this allowed bank to monitor fund utilization and working capital management. Then we have the industry norms for current asset. So raw material if it is measured in month of consumption. Stock in progress if it is now WIP, it is based on month of production. Finished goods and receivable, so here it is expressed in the month of sale. And then we have spares. What about the application of the norms? See, it is quite simple. Norm focused on average level, not temporary fluctuation. Short-term excesses allowed due to the bulk import, right? Power cut, strike, transport delay, stock build for confirm export contract, right? So remember this point. Now, Tandon Committee for Lending Framework. So friends, long-term impact was that recommendation guided commercial bank lending in India for over 20 years. Even after 1999, when RBI removed mandatory compliance, the principle stay relevant. Core idea is that so that banks should fund only a part of the working capital need. It encourages borrower to invest their own fund and reduce over dependence on the bank credit. So what is the gradual approach? Gradual approach is the MPBF. So it introduced three methods of lending, collectively called maximum permissible bank finance MPBF system. Purpose is to balance between bank finance and treasury and borrower contribution. So what is the MPBF formula? First of all, you calculate the working capital gap. How to calculate it? First of all, you write the gross current asset minus current liability other than bank borrowing. This will give you gross working capital limit. Right. So this is first of all you have to calculate the working capital gap. So gross current asset minus current liability other than bank borrowing, and then we determine the MPBF. How to determine the MPBF? It's quite simple. First of all, bank finance is the percentage of WCG. Bank will finance a percentage of WCG, and borrower on contribution increases across the three method. Then we have the second method called Nayak committee method or turnover method, which says that working capital is 25% or 1/4 of the projected annual turnover, and borrower contribution is 5%, bank finance is 20%. For example, let's suppose projected turnover is 100 lakh. So in this case, working capital need will be how much? 25% of the projected annual turnover, which will be 25 lakh. Similarly, promoter contribution will be 5%, which will be 5 lakh. So bank finance will be 20 lakh. If NWC exceed promoter contribution, suppose NWC net working capital exceed promoter contribution, so adjust bank finance accordingly. Like suppose NWC is greater than 5 lakh, right? Suppose 7 lakh is there, so that bank finance is adjusted by proportion, right? Now what is the assessment norms? So it apply both turnover method and traditional method. The sanction based on actual production cycle method. If you look at the applicability of it, so it is recommended for SSI and MSI. Now friends, we have something called fast Matri committee, right? So what this committee was all about? It reviews the CES, that is called Credit Authorization Scheme, and overall credit management. It recommended dropping Tandon third method of lending. It suggested adopting the second method of lending for working capital assessment. What is fast track scheme? This is the RBI initiative. So fast track scheme, it is the objective is to improve the credit appraisal quality in the bank. bank could sanction 50% of the additional credit without RBI approval. For export-oriented manufacturing unit, limit extended to 75%, provided eligibility criteria are met. So that is called fast track method, which means improve the credit appraisal quickly. Bank could sanction 50% of the additional credit. So there is something called Chakravarti Committee, 1985. What happened? There is something called penal interest for delayed payment. So which means government body, PSU, large private units, they must include a penalty clause. Penal interest is almost 2% if you have the supplier bank lending rate. So what is the classification of credit rating? So it may include cash credit, or it may include cash credit 1. Cash credit 1 is done for via supplier for government supplies. Cash credit 2 for a special situation. Cash credit in normal working capital for routine credit. Now what is the interest rate guideline? So if it is cash credit 2, so in this case bank basic lending rate has to be used. If it is a normal working capital limit, CC portion will have the maximum lending rate, and bill finance will have the rate 2% below the basic lending rate, and loan portion between minimum and maximum lending rate. Remember it. Now let's look at the Kanan Committee. So what does the Kanan Committee says? So basically it was appointed by IBA to review the working capital financing. It focused on MPBF framework and it continued relevance in the modern banking. So the fast track scheme accelerated credit, Chakravarti ensured timely payment and a structured limit, and Kanan reviewed MPBF. That is what fast credit approach is all about, So it is designed to improve credit appraisal quality, allow bank to sanction 50% of the additional credit without RBI approval. For export and manufacturing unit, limit extended to 75%. So Kanan Committee we have just talked now. Now let's talk about the next part, that is reform in working capital finance. Yes, let's have a look at it. So friends, reform in the working capital finance, which means scrapping rigidity. So old MPBF formula from Tandon and Core were discontinued. Then flexibility to the bank, which means bank could design their own assessment system within RBI guideline. Then link of the credit system, which is called LCS. So which means that it introduced instead of the sublimit, aligning with our global practices. Now RBI acceptance and modification. MPBF system withdrawn. Bank free to adopt method suitable for borrower. Turnover method is allowed up to 2 crore of the small borrowing. Cash budgeting system permitted for large borrower. Modified MPBF was made operational. Then bank has to publish transparent sector-wise credit policy. And they were directed credit program, quantitative tool, and reporting system continued. What about the Kapoor Committee, 1998? So this was a delegation of power, which means branch manager given greater authority to approve ad hoc limit. This was the first thing which was done after the delegation authority.